Hello, good morning everyone. How are you all doing? Good morning. Welcome to this session. Good morning everyone. Good morning Raghavan. Good morning Deepti. Good morning Anadi. Good morning Gopal. Good morning Raghavam. Good morning Amarjeet. Good morning Akash, Ayan, Sai Kumar, Vivek Sharma. Good morning. Please confirm if I am audible and visible to you. Please confirm if I am audible and visible to you. Please confirm. Good morning, Sagnik. Good morning, Abhishika. Good morning, Om Kumar. Very good morning to all of you. Please confirm if I am audible and visible to you. Both the things are necessary. I should be audible to you. I should be visible to you. Because yes, we are now meeting on a bright morning just before your examination. And the last few days of your examination are very critical, guys. Very critical. No, my objective is not to further tense you or not to further infuse anxiety in you. The purpose is not that. The purpose is very simple, to make you understand. Now guys, few days are left. Okay, so now taking stress is of no use, because now most of the things are not in your hands. And when the things are not in your hands, when the things are not in your control, you should not take any stress, because now the time is very limited. Now whatever you can do, whatever best you can do, you should do it, and not take stress at all, because the time is gone when you should take stress. Now end moment revisions should be done, the last moment brushing up should be done, and that's all, guys. You should not worry about your course which has not been completed, or you're not able to recall something, or you've left some portion of the course. No need to think about all those things now, because now the time is not much there. Okay, so reduce your anxiety levels, reduce your stress levels, guys, as much as possible. Reduce your stress levels, because as soon as you reduce your stress levels, as soon as you reduce your anxiety levels, your output will increase. So if you want to increase your output, you have to reduce your anxiety level. So please reduce the anxiety level to increase output. That is my earnest request to all of you. That is my suggestion to all of you. If you really want to do well in your examination, during this last week, you should reduce your anxiety level. You should reduce your stress. You should reduce your tension. That is the prime ask. That is the prime requirement. Okay, sir, we got it. All right, Mihir Kumar is also there online. Kirti Batra, Muskan Jain, Abhishek Mathur, Rajesh Chaudhary. Very good, guys. Very good. Good morning, everyone. Good morning, all of you, and good morning to this session of audit. So today we are going to discuss the entire syllabus of audit. We are going to take a quick revision of the entire syllabus of audit, and the entire syllabus of audit contains 7 chapters. I've divided your entire syllabus into 7 chapters. Before I start this marathon lecture, let me tell you one very important thing about audit. Guys, audit is the dark horse. What do you mean by dark horse? Dark horse means the horse that is going to take you long, the horse that is going to take you to the borderline, to the finish line. This is that particular horse, because the course is limited. The content is limited. The content is very limited. The level of studies which is required is limited, and the benefit is huge. 50 marks or even more is dedicated towards audit. That is the importance of this particular subject. So the students who are a little bit okay in corporate accounts, who are not very well versed with corporate accounts, for them this particular subject is going to definitely make the big difference. This subject is going to fetch them marks to a very high extent, guys. So this subject should be to your best expertise, to a best revision strategy. This subject should be prepared very well. With that objective in mind, I have come up with this marathon lecture where we will quickly revise the entire syllabus of Inter Audit, CMA Intermediate Audit. Mind you, these classes are exclusively for CMA Intermediate students, which means that any other professional course student should not watch these classes, because, for example, in Chartered Accountancy course, in audit, there are standards of auditing in great detail. However, in CMA Audit, standard on auditing are not there in great detail. Please understand the difference. Therefore, these marathon lectures are exclusively as per the study mat which is prescribed by Institute of Cost Accountants of India. That is the background. All right. So yes, Yash Dodia. Okay, Harmeet, I will see. Yes. Welcome to this audit marathon. I just want to ask whether this marathon will be public or not. Oh yes, yes, it will be public. No worries on that. All right, let's start the marathon of intermediate audit. Let's start CMA Intermediate Audit Marathon. And yes, guys, shoot your questions on the chat box. I will be seeing the questions whenever I get an opportunity. Shoot your questions if you have any doubts, if you have any problem relating to audit. Okay, CMA Intermediate Audit only relating to this particular subject. If you have any problem, shoot it in the chat box. And guys, one more very important thing. Marathon of intermediate CMA direct taxation marathon CMA intermediate applicable for June 22 and December 22 in parts are saved on my YouTube channel. Please go to the playlist and check out the entire marathon. It is saved in parts, which means 1 hour each. Lecture is there. Almost all the chapters have been covered in that particular marathon lectures. So if you are wanting to skip any chapter of direct taxation, saying that sir, this is not very important, just watch that 1 hour or half an hour marathon lecture, so that if 1 mark or 2 mark question will come in the examination, then you will be able to grasp that particular marks. Okay, so do check out the direct taxation marathon, which is already there on my YouTube channel, CMA Intermediate as well as CMA Final students, because many topics are common in CMA Intermediate and Final, like PGBP, capital gains, assessment of various persons. So the CMA Final students can also check out that particular marathon. It will be very useful to you. And yes, I know you are asking same question again and again. What about CMA Final? Cost Audit Marathon is already there on the YouTube channel. Please go to the YouTube channel. I've covered till CAS 4. I've covered all the major chapters. I've covered rules. I've covered professional ethics. I've covered basics. I've covered cost accounting standards till cost accounting standard 4. So all the major portions are already covered in the CMA Final Marathon, which is already saved on my YouTube channel. Yes, in the coming 2-3 days, I'll be coming up with few more topics, marathon video on cost audit and BVM SPM, which I'll be sharing the details with you very soon. But yes, cost audit marathon is already there in the playlist of this particular channel. So make best use of these marathons at the last moment. And yes, guys, now as you can see on the screen, guys, we are starting with chapter number 1, auditing concepts, and this chapter number 1 is the first chapter of your syllabus. So I'll expand the screen a little bit so that you can see the notes properly. Now, so where do we get these notes from? Because we need to study from these notes, then we need these notes. Guys, just see in the description box, I have given a Google Drive link. Just see in the description box, there's a Google Drive link. Go to that Google Drive link. You will get these PDFs. What are these PDFs? These PDFs are summary notes of entire audit. But please remember, these are very brief notes. Okay, these are not substitute of the full notes that I have provided to you in the class. Okay, these are not substitute. These are just to revise the subject one day before the examination. But don't consider this as a full-fledged notes. Okay, these are just summary notes. These are like very small brief notes which I have provided to you. So if you want these notes, although the students who are taking audit class, they already have these notes in their book. Those students who are not taking audit class from me, they can download these notes from the Google Drive. Google Drive link is given in the description box. Just see the description box. Google Drive link is given over there. All right, guys. So hereby, I start the first chapter of intermediate audit. Audit is a very theoretical topic, and you require a lot of rectification skills in audit. What do you mean by rectification? Rectification means mugging up skills. You need to mug up entire audit, reproduce it as it is in the examination. If you don't have the skills of mugging word to word, then you will not be able to perform well in audit. So the prime requirement of performing well in audit is to mug up the entire portion of audit word by word. Each word should be mugged up properly. So word by word, you should mug up audit and then reproduce it in the examination to get good marks. So audit basically is only and only mugging up. No brain involvement, no logical reasoning involved, no analytical mind involved at all. I know many of you are there in this lecture who are thinking the same, and who are there in this particular lecture thinking or having this notion in mind, because most of the students think that audit is a theoretical subject. We just need to mug it up and that's it. We do not want to do anything else. We can't understand it because it's a theoretical subject. Guys, please change your notion. Please change your notion. Audit is not a theoretical subject. Audit is as practical as accountancy, as practical as cost accountancy, as practical as direct taxation. Audit is a practical subject. You need to understand the concepts practically. And in the class, I also practically make you do certain things which are taught theoretically. I make you do certain things. So audit is a pure practical subject. It's not a theoretical subject. Please remove this notion out of your mind. Unless and until you understand audit, unless and until you understand the essential features of audit, you will not be able to study audit well. So, no, not a theoretical subject. All right, sir. We trust you, sir. We trust you. Not a theoretical subject. It's a practical subject. All right, let's start first chapter. Let's start the first chapter. First chapter is auditing concepts. So first of all, we have definition of auditing. What do you mean by audit? Okay. So in your book, there are several definitions which are given. You can remember 2 or 3 definitions. That's it. You need not remember all the definitions. I have picked up definition which is given by Standard on Auditing 200. So what is audit? Audit is a systematic and independent examination of financial information. Now, some words are to be absolutely remembered as it is, guys. Some words are non-compromisable. Words like it's a systematic examination, it's an independent examination, it's a systematic examination, and it's an independent examination. So these two words are to be grasped by you as it is. It's a systematic examination. Systematic means it's not haywire. You have to follow a method while examining the financial information. There has to be a method which is employed to audit the financial information. Secondly, it has to be independent. What do you mean by independent? Independent means it has to be free from any bias. It has to be free from any influence. The auditor should not be influenced. The auditor should not be under bias of someone. For example, if the auditor has taken loan of 50 lakh rupees from the company which he is auditing, then auditor will always be under a bias. Auditor will always think, oh, I am having such a big loan from the company, I should not give any qualification in the audit report of the company. Auditor will always be under pressure. So audit should not be under pressure. Audit should not be under any bias. Audit should not be under any influence. This is the meaning of the word independent. So two words which define audit is, one is systematic. It has to be systematic, which means methodical. Second is it has to be independent, which means that auditor should not be having any bias. Auditor should not be having any influence of what? Of the financial information. Whatever information is given to you, that information needs to be audited. So over here, the concern is financial information. Guys, if you talk about cost audit, then costing information will be given to you. So in case of cost audit, what will you audit? Costing information. In case of financial audit, what will you audit? Financial information. In case of management audit, what will you audit? Management decision making. So depending upon which audit is there, this information will keep on changing. So it is audit examination of financial information of an entity, whether profit making or not. So entity can be a profit making entity or a non-profit making entity. Now you will ask me, sir, if it is a non-profit making entity, why do we need to audit that particular entity? Guys, to ensure that the funds which is being received by the non-profit making entity, they are being employed in the purposes which are non-profit making. The people who are holding that particular organization should not use those funds for their own benefit. Like, trustees of a temple gets donations, right? It's a non-profit organization. The donation should be used for welfare of people and not the welfare of the trustees, right? So whether profit-making organization is there or not, all the organization, whether it is a large organization, whether it is a small organization, all the organization needs audit with a view to express an opinion. Now, this is very, very important. What is the ultimate objective? What is the ultimate objective of audit? Is it to find errors and frauds and mistakes? Is it that is the objective? No, that is not the ultimate objective. The ultimate objective is to express an opinion, to tell whether the financial statements are prepared correctly or not, whether the cost information is prepared correctly or not, whether the cost information is given correctly or not. That is the objective of audit. It is not to correct mistakes, to find out mistakes. It is not, that is not the objective of audit. Objective of audit is to express an opinion on the financial information which is being given. That is the objective of audit. All right. So, simultaneously, I'm also checking your comments if you have any questions so that I can answer them. All right, sir. Next, what is the purpose or objective of audit? I've already told you. The primary purpose of audit is to express a true and fair view on the financial statements. So you have to express your opinion that yes, if financial statements is saying that fixed assets are worth 50 crores, then yes, genuinely there are fixed assets which are worth 50 crores. This is the assurance that you have to give to the auditee. The auditor has to give to the auditee. So the ultimate objective of audit is to express a true and fair view, on the financial information which is being supplied. This is the ultimate objective or ultimate purpose of audit. After examining the internal and external evidences, of course, how will you ensure that fixed assets are worth 50 crores? How will you ensure? How will someone ensure? The method of ensuring is that they will check the invoices, the purchase invoices. After checking the purchase invoices, they will be sure, yes, the company has purchased fixed assets worth rupees 50 crores during the year. You can do one thing, guys. You can do one more thing. You can check the bank statement that 50 crore rupees has been sent to the vendor. Bank statement can be checked to be doubly sure that yes, 50 crore worth rupees of fixed assets have been purchased by the company. So you will rely on internal and external evidences to ensure that yes, whatever is given in the balance sheet, it is correct. So balance sheet is disclosing debtors worth rupees 20 lakhs. You need to ensure that these debtors are actually there. These debtors are very much there. So you need to ensure that. So external and internal evidences, with the help of external and internal evidences, you have to express an opinion. This is the objective of audit. So, sir, are we not supposed to check the errors, frauds, mistakes? Is that not our objective? Yes, guys, that is also your objective, but it is the secondary objective. It is the secondary objective. Your primary objective is to express an opinion. Your secondary objective is to unearth errors, frauds, mistakes. That is your secondary objective. The primary objective will always be, to give a true and fair view. All right, sir. Features of audit. Now, what are the features of audit? What are the characteristics of audit which audit discloses? It involves evaluation and verification of supporting documents. So that is the main thing which auditor do, guys. Main thing is that it will analyze or evaluate, verify the supporting documents. So what do you mean by supporting documents? Supporting document means invoices, challans, receipts, sales invoices, purchases invoices, bank statements. All these things are required to be checked. So what are the features of audit? Number one, it involves evaluation and verification. Guys, the words which I'm marking in round, you should remember those words, okay? Evaluation and verification of supporting documents, right? Then involves review of system of accounting and internal controls. So you have to check whether accounting is being done correctly or not, right? So, if you purchase something, then typically the accounting entry of purchases is purchases account debit to bank. Now you need to make sure that by mistake, the company shouldn't have done bank account debit to purchases. Reverse entry by mistake should not have been passed. So the company has a proper system of accounts where accounts are maintained properly. You need to ensure that. Secondly, the company should have internal controls. What do you mean by internal controls? Guys, internal control means checks which are employed by the company to ensure that no error is there in the financial statements. So what are internal controls? Internal controls are some checks and balances which are employed by the company to ensure that no errors are there in the financial statements. I'll give you an example, okay? Now, there are two employees with the company. Employee number one will put the entry in the accounting system, like we have purchased some goods, right? Then it will be purchases account debit to bank, okay? Now that entry will be put by Mr. Mohan. Now, what is duty of Mr. Sohan? Duty of Mr. Sohan is that he will cross-check the entry which is posted by Mr. Mohan. So Sohan is getting salary just to cross check or just to check whether the entry which is put by Mohan is correct or not. The activity of Sohan is not an accounting activity, it is an internal control activity. The activity of Mohan, the first person, is accounting activity. What is Mohan doing? Mohan is accounting, is helping in accounting. He is putting accounting entries. That is done by Mohan. Then what is Sohan doing? Is Sohan doing accounting? Answer is no. Sohan is not doing accounting. Sohan is doing internal check or internal control. So therefore, The auditor should review whether the accounting process is correct or not. Secondly, it should review whether internal controls are there or not. Because guys, virtually it is impossible for the auditor to check all the transactions. It is not possible for the auditor to check all the transactions. But if auditor checks these internal controls, and if the auditor is sure that yes, checking is being done properly, then there's a reasonable level of comfort which auditor gets, that yes, everything should be fine because an activity is being checked by some other person also. So everything is fine. The information audited may be financial or non-financial. Now, this is a very, very important point of audit, guys, that the information which auditor processes may be financial information or non-financial information. Guys, what do you mean by non-financial information? Non-financial information means an information that is happening, but which will have an impact on the company later, after later point in time. Okay, so I'll tell you about financial information first. What do you mean by financial information? Financial information means the activity which is happening for the conduct of business, like purchase of raw materials, selling of goods, giving salaries to the employees. These are all financial information. Now, what are non-financial information? Non-financial information means information that the company is opening a new factory in, say, Manesar. That is a non-financial information. How will it have impact on my balance sheet? Because the factory will be will be launched at a later point in time. Everything will be done at a later point in time. What is the impact today, guys? The impact today on the financial statements will be that the shareholders should be aware about this fact that a new factory is being launched or is being opened in Manesar. The shareholders should be aware about it. Or if there's a vice versa information, if there's an information that a plant of the company is being closed, right? This is not a financial information. This is not a financial information. This is a non-financial information. Now, this information will be very, very relevant for the shareholders, because shareholders will get to know that if a company is closing some plant in its one of the areas, then there is some concern. There is some problem. Why is company closing its plant? Is the company going to close down? Is the company running into losses? Is the company having any huge penalty? Lot of questions come into minds of the shareholders. So although this information is a non-financial information that a company is going to close one of its plants, still this information is relevant. So auditor should audit not only the financial information, but also the non-financial information. The auditor should be competent and independent. So there are two things which auditor should have. There are two things which auditor should have. One, auditor should be competent. How do you become competent? You become competent by two things. Thing number one, degree. You should have a degree. So for example, financial auditor can be a chartered accountant. So you should have a CA degree. Cost auditor should be a cost and management accountant. So you should be a CMA. So the first requirement is degree. The auditor should have the necessary degree. Second requirement is auditor should have skill or experience. Auditor should be skilled. Auditor should know what to do, when to do, what steps to be taken, who should do that step. Auditor should know all that stuff. So auditor should be skilled. Auditor should be experienced. How do you ensure that auditor is competent? By ensuring two things. Number one, auditor should have degree. Number two, auditor should have skills and experience. Then the second requirement is auditor should be independent. Now, you guys tell me, what do you mean by independent in the chat box? You guys tell me, what do you mean by independent in the chat box? I have just now declared, I've just now told the meaning of independence. Okay, please tell me in the chat box. Fastest fingers first. I don't want you to sleep. Okay, when I am so active, you should be equally active. Fastest fingers first. I want you to tell me, what do you mean by independent? How do auditor become independent? What is the meaning of independent? I've just now disclosed. So please tell me, what is the meaning of independence? I've just now told you. Okay, Rohini, wow, Rohi, Mahir, very good. Mihir, Deepti, very good. Free from any influence, very good. Perfect. Deepti Raut, perfect. Khushwant, Muskan Jain, Srinath, brilliant. Anyone else? What do you mean by independent? Alakmar, Yes, Alakmar has, disclosed one more very important feature. Alakmar says his scope should not be restricted. This is very important feature of independence. Very good, Alakmar. Very good. Is not bound from any. Very good, Abhishek. Just one, free from influence. Very good. Akansha, free from bias. Very good. Good. Everyone is absolutely correct. Independence means that the auditor should be free from any influence. He should be free from any bias. That is the prime requirement of auditor. Now, what do you mean by scope of audit? What is the scope of audit? To what extent should the auditor go, okay, to audit your financial statements? That is the next question. What is the scope of audit? What all should auditor do to check the auditee's financial statements? That is the next question. So we are studying scope of audit. There's a very, very old saying that auditor is a watchdog and not a bloodhound. Auditor is a watchdog and not a bloodhound. What do you mean by watchdog? Watchdog means a person who barks, okay? Watchdog is a person who's tied outside the factory or outside your home and he just barks. Bloodhound is the person who would actually go using his smell powers. He would you must have seen police guys carrying bloodhounds, okay? They actually using their smelling skills, they would lead you to the culprit, okay? Though those are known as bloodhounds, and if need be they can also attack the culprit, okay? But watchdogs are the dogs which are there in our homes, guys. They are tied at the doorstep, and if someone comes, if some stranger comes, they would bark, okay? Auditor is a watchdog and not a bloodhound, which means investigation is not under purview of auditor. Investigation is not under purview of auditor. Auditor can only do audit, okay? Now let me tell you a practical example of difference between investigation and audit, and I will take my own example. When I was working in statutory audit division of one of the big fours, then I had faced this situation. So I'm giving you my live example itself, guys. Okay, so earlier days of my audit, when I was very young, initial days of my audit, I started auditing a particular expense of in an organization. That expense contained marketing cost of 5 crore rupees. When I called for the vouchers, or when I called for the invoices, those invoices looked a little weird to me. Why did they look weird to me? Because those invoices had a heading that Delhi Motor Sales Company. The name of the company was Delhi Motor Sales Company, and the company, this particular company, Delhi Motor Sales Company, had sold banners to my company. They had sold banners to my company. Now my question that struck my mind is, why would a motor company sell banners to my company? Motor company should sell motor. Why motor company will sell banners? Now this sounded very weird to me, okay? Then the next invoice came in front of me. The next invoice was in name of a gentleman, of a individual, and he had supplied canopies to the company. What are canopies? Canopies are those four sticks which are temporary insertions on road which display the product. So although this entire expense was marketing expense, and this made sense, canopies, banners, these made sense, but the headings or the invoices, the name of the companies who are supplying these stuff to the company, those sounded little weird to me. I was a little setback. I was a little not convinced by the expenditure which was in front of me, which was worth 5 crore rupees. What did I do? I called up motor company, Delhi Sales Motor Company, and I asked them, can you sell me banners? The company said, no, we are a motor company. We can sell you motors. How can we sell you banners? We don't sell banners. My inquisitiveness further increased. I thought that, yes, something fishy is going on in the company. Okay. What did I do? I visited Delhi Sales Motor Company the next day. And at their counter, I showed them their invoice. You have issued this invoice to a company and you have sold banner to that company, and on call you are telling me that you don't sell banners, you only sell motor which is water motor and all. What rubbish are you doing? Are you doing some hanky panky stuff? Those guys got a little scared, a little jittery. They said that you talk to our owners. We don't know. Owners were not there at that point in time. You talk to our owners, you come back in the evening, you talk to our owners. I left the premises of that particular shop. I felt very relieved. I felt like Sherlock Holmes. Those long black coat was there on me. I was having a cigar, an artificial cigar in my mouth, and I thought that I am the biggest investigator in the world, and all those hardy boys and all those detective movies or detective novels that I had read in my earlier days, those got very refreshed in my mind, and I thought that I'm a investigator like Byomkesh Bakshi, or I'm an investigator like Sherlock Holmes. I felt very accomplished. I called up my manager and I said, I want a promotion this year. My manager said, why do you want a promotion? I said, because I have unearthed fraud worth rupees 5 crores. This company is claiming marketing expenses of 5 crores. This 5 crores is fake. This 5 crores is not marketing expenses, something else. So promotion was expected from me. And when promotion was expected by me, when I went to office, my manager scolded me. It took my class left, right, and center because, guys, I had exceeded my scope. My scope was not to call a third party vendor. My scope was not to visit site of a third party vendor. I can at max see the vouchers, I can see the invoices, and if there's something fishy, I can report it in my audit report. But I cannot call them and ask them whether you supply banners or not. This is the wrong thing that I did. Auditor is not an investigator. You are not Sherlock Holmes. Please understand. You are not Byomkesh Bakshi. So the scope of audit is very restrictive, guys. Very restrictive. Please understand the restriction of scope of audit. Scope of audit of financial statements is very restrictive, which means that it is not investigation. It is not investigation. You cannot investigate. You cannot wear black coat of Byomkesh Bakshi and Sherlock Holmes and go investigation with that micro glass, that glass in your hand. You cannot do that. No, you are an auditor. You are not a investigator. So auditor is not an investigator. Auditor is just required to see the vouchers, require the documentary evidence. If need be, they can take third party confirmation in cognizance of the management of the company. So I should have contacted the management of the company first. I should have told them that this is some motor company which is selling you banners and I find it fishy. I want to meet them. I should have gone through the management of the company. I should not have done it independently. I am not an investigator. So guys, the scope of audit is that auditor is just a watchdog and not a bloodhound. Auditor is just a watchdog, not a bloodhound. Your scope is limited to audit and not investigation. Please hold yourself. Please hold your horses whenever you feel like Sherlock Holmes or Byomkesh Bakshi. Okay. Now, who can be an auditor? As I've already told you, there are two specific requirements of being an auditor. Number one, he should possess degree and skills. Number two, he should be independent. So who can be an auditor? What are the qualities of an auditor? A person who's professionally qualified, which again means degree. You should hold a degree. Okay. For financial audit, you need to have chartered accountancy degree. For cost audit, you need to have cost accountancy degree. So degree is mandatory for audit. Degree is mandatory for audit. Should have a certificate of practice. So COP is required if you want to do audit. COP is very much required. Certificate of practice it is. So after you qualify your CMA, you will be given an option. Either you can work for a company or you can start your own practice. Only if you choose to start your own practice, then only can you do audit. So COP is for people who want to do audit from the relevant authority. Should possess knowledge of. Now this is very important. Of course, you should have the skill set. You should have knowledge of Companies Act 2013. You should have knowledge of the Companies Act. You should have knowledge of the audit of companies. How are audit of companies done? You should have that knowledge. You should have a knowledge of specific laws. So if you are doing audit of a banking company, then you should know the Banking Regulation Act. You should have knowledge of the specific laws which are there. Okay, so specific laws you should be aware about, like banking law. You should be aware about banking law if you're doing banking companies audit. If you're doing insurance companies audit, then you should be aware about the IRDA regulations, right? So you should also know the particular law which is applicable to that particular company. Should be independent of client. Again, same requirement again and again. What is independence? Independence means free from bias, free from influence. You should be free from influence. Should possess integrity, honesty, and objectivity. Now, these are personal traits which auditor should have. Auditor should always be honest. Auditor should also have integrity. Guys, what is integrity? Integrity is that you are able to distinguish between what is right and what is wrong. I still remember, guys. I was auditing a major shoe company. I was auditing a major shoe company. There was a shoe company, very big shoe company, big name. I was auditing that particular organization. When the CFO came to the audit room and they offered vouchers worth rupees 20,000, which were redeemable at any store of the country of that particular shoes. So I could have bought shoes worth rupees 20,000 from any of the store of that particular shoe manufacturing company. And mind you, over there, one shoe is of 6,000, 7,000, 8,000 worth. So it's not that it was a cheaper brand. It was a very, very expensive brand. But it was our honesty. It was our integrity and our manager's integrity, our partner's integrity. We refused those vouchers. Guys, while doing audit, there are a lot of lot of emoluments that might be given to you, but you have to decide what emoluments are you are going to accept, what emoluments you are not going to accept. That you have to understand. So you should have integrity, you should be honest, and you should be objective. Objective means you should be clearly able to demarcate between what is right, what is wrong, yes, no. That should be clearly, fairly put in your mind. So that is one personal trait that you should have apart from the skills. Skills are definitely required. Communication skills are very, very important in audit, because audit requires expression of opinion. And expression is always done in words, in English, not in Hindi. Expression is always done in words, in English, not in Hindi. So you should have good communication skills. You should be able to use good English, no grammatical mistakes, no mistakes of is, am, are, the, etc., etc. No punctuation mistakes. Mistakes should not be given. You should have good communication skills. You should have good drafting skills. How should you draft your thought? How should you present your thought? That is very, very important. So you should have good communication skills. You should have good drafting skills, and audit report should be free from any language or grammatical errors. Last thing that you want is that client is telling you, sir, spelling of auditor is incorrect in your audit report. See, what fun, what mockery will you undergo? What weird thing will you undergo if you are told that, sir, spelling of auditor is wrong in your audit report? How much embarrassing that situation will be for all of you if you do that thing. So last thing you want is any language or grammatical errors. Guys, once again, I repeat, those who have joined recently, the PDF notes which I am showing to you on the screen, these PDF notes are available on the Google link, which is there in the description box below. In the description box, there's a Google link. You can click on that Google link. You will go. You will be leading to a Google Drive. You can download the PDF of these notes on your desktop, and you can easily see them. You can mark them just like I'm marking them. You can mark them. Take a printout, mark them, because marking them will help you revise the entire syllabus. And please note, these are not the detailed notes. These are summary notes. Okay, these are summary notes. So these are just useful for revision. If you want to revise at the end day, these notes will be very, very useful. But these are very, very summary. These are short notes, okay, and contains most of the important provisions of the book. Okay, so don't treat them as the entire book. Okay, okay, sir, got it. So next is distinguishing factor between accounting and auditing. What is the distinction between accounting and auditing? What is accounting and what is auditing? That is what we are going to see now. Accounting means recording. Accounting means recording. To put accounting entries, that is accounting. So if I have purchased, raw material, my accounting entry will be raw material account debit to bank. If I purchase raw material, the accounting entry will be raw material account debit to bank. That is accounting. Okay. Now, what is audit? Audit is evaluating the evidences. What do you mean by that? I mean that, if I'm putting an accounting entry that raw material account debit to bank, please show me the invoice. The raw material vendor would have given you the invoice. Please show me the invoice. Please show me the transporter's receipt. Transporter would have shipped the goods from the vendor to your company's office. Please show me transporter's advice, bilty or challan that transporter has given you, because you might have shipped it to your office, right? Please show me the gate inward register stamp. There will be a stamp on the gate inward that yes, this kind of raw material has been introduced in the company, that has come in the company. So please give me that stamp. So that stamp that will be given to you, that will be again an audit evidence that yes, this transaction has actually happened. And one more thing that I would ask from you is, please show me that the amount has been debited to the bank account of the vendor. The amount has gone out from your bank statement. Show me the bank statement. So all these activities of analyzing the entire transaction, seeing the supporting evidence, is known as audit. However, what do you mean by accounting? Accounting means only recording. The transactions are only recorded in the books of accounts. Now, the purpose of accounting is to prepare financial statements like balance sheet, profit and loss account, and the schedules. So, what is the objective of accounting? Objective of accounting is that the ultimately we want to prepare the balance sheet. To prepare the balance sheet, we need the trial balance, right? I hope you remember the sequence, right? We have accounting entries, we have the journal entries which are put in, then we prepare trial balance from it, then we prepare profit and loss account, then we prepare the balance sheet. This is the sequence, right? Ultimate objective is to prepare the balance sheet and the profit and loss account. For that, we need a trial balance. For trial balance, we need the accounting entries, right? So what is the use of accounting? Accounting's use is to prepare the trial balance and ultimately prepare the balance sheet and the P&L account. But what is the objective of auditing? Objective of auditing is to give the true and fair opinion on the financial statements. Objective of auditing is to prepare an audit report on the findings which are found during the course of audit. To prepare this audit report, to see that the fair and true and fair opinion is given by the auditor, that is the ultimate objective of auditing. That is the difference. Okay, so accounting, it is directed towards preparation of balance sheet, P&L account. That's it. Accounting finishes over there. However, where accounting finishes, auditing starts. Where accounting finishes, auditing starts. Auditing starts when accounting finishes. Auditing will start as soon as balance sheet is prepared, profit and loss account is prepared. Now auditing will start. How will auditing start? Auditing will now make sure that your balance sheet is prepared in the true manner, in a fair manner. That is the objective of auditing. Then what is the purpose of accounting? Purpose of accounting is to make financial statement assertions. Assertions means, assertion means to say that, okay, if balance sheet is showing a fixed assets worth rupees 10 crore rupees, and there are 10 crore rupees fixed assets in the company. This is an assertion. Assertion means a claim. Management of the company makes this claim. So the board of directors are saying, oh, we are a big company, we are having fixed assets worth rupees 10 crore rupees. Management and board of directors are saying this thing, we are big company, we are having fixed assets worth rupees 10 crore. This is a claim which management of the company is making using the accounting record. What is the purpose of audit? Purpose of audit is to verify this claim, whether these claims are tall claims or whether these claims are actual claims. To verify these assertions. Assertion means what? Assertion means claims which are done by the management. And the purpose of auditing is to verify these claims, whether these claims are correct or not. So verify the assertions which are made by the management. That is the role of auditor. I hope you understood the meaning of assertion. Assertion means claim which the management is making with respect to the financial statements. So management will make the assertions, will make the claim that yes, we have debtors worth rupees 25 lakhs. We have other current assets worth rupees 1 crore. We have share capital worth rupees 100 crores. These are the assertions, or these are the claims which management is making. Who will check this claim? Auditor will check this claim, whether the management is right or wrong. That is duty of the auditor. Then next is distribute the audit financial statements and audit reports to the shareholders. Now, what will management do? Management will distribute the audited financial statements to the shareholders. Then what will auditor do? Auditor will deliver the audit report to the company. Role of auditor is to deliver the audit report to the company. Now, it's company's prerogative that they will distribute this audit report to the various stakeholders, whosoever requires this audit report. Like, shareholders require this audit report. Even the loan people required this audit report. Now, in the chat box, fastest fingers first. Please tell me, why would bank who has given us loan require the audit report? Why should we supply the audit report to the bank? I don't understand. Why bank needs audit report? Why is audit report required by bank? Why would bank need the audit report? I will not give my audit report to bank. My question is, why would bank who has given us the loan require financial statements of our company, with that too audited financial statements? Why would bank require that particular statement, audit report, and the um, financial statements? Who has given us loan? Answer in the chat box. Fastest fingers first. Let's see who answers first. Let's see who answers first. I'm waiting for the answers. Short answers, guys. Short answers. Bank has given us loan. Why should I supply audit report to bank? Why? Oh, Khushwant Mandapati. Khushwant Mandapati. Okay, good answer. Anyone else? Anyone else? Why would bank need our audited financial statements? Anyone else? To know the financial position and soundness of the company, brilliant answer by Alakmar Bahiwal, and I will highlight this answer on the computer screen. I will highlight this answer because it's an amazing answer. Asset quality. What is asset quality? Bhavisha Bhatia. I will again highlight one more answer on the screen. Please, guys, see these amazing answers on the screen. Bhavisha Bhatia. Bhavisha Bhatia. Akash SAA2703 is right. Yes, Muskan Jain is also right. That bank is able to return the loan with interest. We need to ensure that. Perfect. Because bank wants its loan to be repaid. Yes. So bank wants to be sure that the loan which is given by the bank to the company, whether that is repayable, whether the company will be able to repay that loan or not. That is why the audit report is required by the bank, so that if there is any credit worthiness issue, bank can highlight it. All right. Now, what is the difference between audit and investigation? I have already highlighted this particular aspect to you using my example, guys, right? My example of that marketing expense, which I was auditing, that example is in front of you. So the difference between audit and investigation is very, very clear from that particular example. Examination of records to ascertain whether financial statements are true and fair. So the purpose of audit is examination of records, the checking of records to ascertain whether they are true and fair. What is investigation? Investigation is examination of record to ascertain whether the specified fact is true or not. So guys, investigation is done for a specified fact, which means whether debtors are correct or not. This is the fact which is being analyzed in investigation. However, in case of audit, it is not a fact that is being ascertained. It is the whole financial statements are being scrutinized and analyzed to know whether the entire financial statements are true and fair or not. However, in case of investigation, investigation is done only with respect to one particular aspect. So if there's any fraud which has happened in the company, for that particular fraud, investigation will happen. Okay. However, in case of audit, it is a general checking which is done for the entire financial statements. That is the first difference. Second, audit is wider in scope as it covers checking almost all the aspects of financial statements. So in audit, we check all the financial statements aspect. However, in case of investigation, it is narrower in scope because only some specific areas are being checked. In investigation, all the areas are generally not checked, only specific areas are being checked. Conducted in accordance with generally accepting auditing principles. So audit is the base, auditing principles are the base for conducting audit. However, investigation contains advanced procedure like forensics, like Inspector Savalke and Dr. Savalke, who's there in CID, right? He's an investigator, he's a forensic investigator. So all those evidence collecting, giving it to the lab, forensic lab, testing it, all these form part of investigation. This is not audit. In audit, you don't use forensic analysis, you don't use forensic labs to conduct audit. Audit is done on the basis of paper. Paper means documentary evidence, whichever you have. The evidence which is there in audit is a persuasive evidence. However, evidence in investigation is conclusive evidence. Persuasive means it is more than 50% sure that this is correct. Conclusive means it is 100% sure that it is correct, right? So what is the difference between persuasive and conclusive? Persuasive means we are reasonably sure, more than 50 or 60% sure that everything is okay. In case of conclusive evidence, we are 100% sure that everything is okay. So how would you differentiate? We would differentiate, guys. I have seen those marketing invoices, right? Now, using those marketing invoices, I can gauge a 60% surety that everything is okay. But what if I visit that shop and see it by my eyes that yes, this shop is selling banners? Then I will be 100% sure. So investigation will employ certain procedures by which they can be 100% sure. Audit does not employ those procedures. When audit does not employ those procedures, the audit evidence is persuasive. Persuasive means 50-60% okay that everything is okay. In case of investigation, we are 100% sure that everything is okay because our steps are very in-depth. Our steps are investigatory steps. Auditor has a positive mindset. Investigator has a negative mindset. This is very, very important. Auditor starts on a premises that everything is okay. I'm going to go there and check the financial statements and everything is okay. Salunke, yes, Kirti. Doctor, yeah, that was Dr. Salunke. Yes. Avoid window dressing. Venkata, very good answer. Venkata says avoiding window dressing. Very good. So yes, Professor Dr. Savalke, Now, in case of CID, everything starts with a negative assumption. What is that? Always the head of the chief CID, the chief of the CID will always say that, kuch to gadbad hai daya, theek karo, kuch to gadbad hai. He was always say this. So the mindset in investigation is negative mindset. They will always presume that there's something wrong. However, an auditor always presume that there is something positive, there is something correct. That is the difference between audit and investigation. Audit is a routine exercise and investigation is a non-routine exercise, which means audit happens yearly. Routine exercise means audit happens regularly. Regularly means yearly, half yearly, quarterly, any kind of frequency can be there for audit. However, in case of investigation, it is non-routine. Non-routine means it happens once in a while. It happens once in a while. So audit is routine, investigation is non-routine. Investigation happens once in a while. Next is aspects to be covered while auditing. When you cover auditing, what all things that you see as an auditor? I would first of all see accounting. That is basic, guys. Basic. I would want to know whether accounting entries are passed correctly or not. If you are purchasing something, accounting entry should be purchases account debit to bank. I want to first of all see the accounting. Then I want to see internal control system, that if accounting is being done, is it being checked by someone else? Is someone else looking at those accounting entries and checking those accounting entries? That is the second aspect that I'm going to see. So accounting and internal controls are the two things that I'm going to see. Accounting and internal control. Then third is books and records. What books and records are being made? What are the ingredients of books and records? That is what I'm going to check as the third thing. Then statutory and regulatory compliances. Whatever law is being followed by the company, like Companies Act, like Income Tax Act, like Gratuity Act, like Provident Fund Act, all the acts are being complied with by the company or not. As an auditor, I would want to know that. So why would you want to know that? If the company is not following certain act, then it will face penalty in that act. Why as an auditor do you want to check whether that particular act is being followed or not? The reason is very clear. If the act is not being followed, then penalty provision will be required to be made in the books of accounts. My expenses will rise. My expenses will rise. My profit will go low because provision will be required to be made for penalties. Therefore, I should be aware whether statutory and regulatory compliances are being done by the company or not. Then last is reporting requirements. What all is required to be reported in the audit report or in the financial statement, they should be reported by way of footnote, by way of notes to accounts or any other medium. Reporting should be done 100%. Then very important point, guys. What are the principles governing an audit? What are the principles that govern an audit? Integrity, objectivity, independence. These are the three principles which are core to audit. Okay, in short, they are known as IOI. Integrity, objectivity, independence. Any auditor should disclose these, should enumerate these three positive features in him. He should have integrity, which means honesty. He should be objective means he should be able to distinguish between right and wrong, and he should be able to say that this is right, this is wrong. So objectivity is the second. Third is independence, again free from bias, free from influence. Okay. Confidentiality, this is very very important. Auditor should not disclose any information, client specific information, to anyone else. Auditor should not disclose it. If auditor discloses any client specific information to anyone else, it is known as insider trading. It is known as insider trading, and it is a punishable offense, not only under Companies Act but also under SEBI, also under many other acts. Okay, it is a punishable offense. Insider trading should not happen. You should keep the confidential information of the company only with you. I'll tell you my own example where I, by mistake entered into insider trading, and by mistake I did something wrong. Okay, I am confessing in front of the entire nation today that I did this wrong. When I was in my auditing career, when I was in my auditing days, I did this very wrong thing. I did insider trading. How did I do insider trading? So guys, this was a very big listed company whose audit I was doing. While doing the audit of that particular company, guys, I actually was privy to a project which the company was going to launch in next 6 months. It was a big project whereby the company was entering into a joint venture with a foreign company for establishing a manufacturing plant in outskirts of Delhi. So there's a manufacturing plant which was developed in outskirts of Delhi, and that manufacturing plant was actually developed and constructed in outskirts of Delhi. And using that plant, that company was entering into a joint venture with a very big multinational company. Now, this joint venture was not out in public. No information of this joint venture was there in public. But since we were the auditors, the company shared the information with us. Guys, when I came back to my office, then I was generally casually doing some small talks about the company with someone else. Someone else asked me, where were you auditing? So I told them that I was auditing this big listed multinational company who's planning to open its plant in Manesar or Bahadurgarh, or a very big place, and they are having a joint venture with a foreign company. That person didn't react much at that point in time, but after 2-3 months, that person came back to me and told me, Nikhil, I got a huge benefit from the information which you delivered to me. I said, how? He told me that information which you told us when you were auditing that company, that was not out in public. So immediately during that particular day, I bought a lot of shares of that particular company at the market price. After 2 months, the share price bloated. After the information of this joint venture was released in market, the share prices bloated. The share prices increased. I sold the shares, and within 2-3 months, I earned capital gains. Guys, by mistake, I did insider trading by mistake. So please tell us, for which company did you do this? Yes, I will definitely tell you, so that you deliver this information to SEBI and Companies Act and RBI, and I am behind the bars. That is the objective which you have in your mind. I can clearly see your culprit state of mind. No, I am not going to disclose you for which company I did this insider trading. But yes, as an auditor, you might do insider trading. So you should be aware about this fact that as an auditor, you cannot do insider trading. Your information which you get from the company should be absolutely confidential. It should only be with you. Skill and competence, I've already discussed. You should be a chartered accountant. You should have a degree, second, or a cost accountant, and you should have the experience and training of auditing big firms. Work performed by others. Now, this is a very important principle of audit. Um, uh, you know, you have to delegate some work to other people also. You cannot do everything yourself. For example, you will delegate your work to your juniors who are non-chartered accountants or who are not non-cost accountants. You will delegate the work to any third-party consultant for doing some valuation or doing some income tax provisioning, etc., etc. So you'll be relying on many people for your work as an auditor, but the ultimate responsibility is yours. Tomorrow, if any error comes in the audit report, you cannot say that, oh, I did not do this, my junior did this. No, the ultimate responsibility is yours, even when you are getting work done by someone else. So auditor is responsible for the work performed by others, like his subordinates, external experts, etc. So auditor will be responsible for any work performed by any other person. That is the principle. Documentation is very, very important, guys. It is said that if you have not documented your audit procedures well, then you have not audited. The law will consider that you have not audited at all if your documentation is weak. So you should document every step of audit that you have done, you have performed. You should document it. For example, if while auditing purchases, you have seen the purchase invoice, write it. I have seen purchase invoice number 1502 dated so and so, and I've verified all the things which are there in the purchase invoice. You should write it. Write that I have seen bilty or the challan which was given by the transporter. He has delivered the goods to the factory gate. Write it. So everything should be in written. Nothing should be in oral, because tomorrow even you don't remember. You won't remember that what did you do in this particular auditing process. So documentation should be very, very strong. Then planning is an important part of audit, guys, and planning contains three important things: nature, timing, and extent of audit procedures. You have to remember these three words. Okay, nature, timing, and extent. In short, I say it as NTE. So what will be the nature of audit procedures that you will perform? What is the nature of audit procedures? Whether you will go in depth in this particular account head, or you will only look at the things overall on an overall basis. So guys, the account heads which are not very important, we can just see them on a broad level, right? But the account heads which are very, very important, we have to do in-depth checking of those account heads. So nature of the audit procedures, first of all, is very, very relevant. Then timing of the audit procedure. Like, if you want to physically verify the inventory, you cannot do it any other day except from the last day of the previous year, because the inventory is always reported as on the last day of the previous year. So if your year ends on 31st March 2022, then your inventory valuation or inventory verification should be done on that day itself. You cannot do an inventory verification on 15th of February, because your inventory verification should be done on the date of balance sheet, because your disclosure is to be made on the date of balance sheet. So this is very, very important, that the nature and the timing of the audit procedure is very important. Once time has gone, then even if you want to do that audit procedure, it will be of no use, it will be of no benefit. Then third is extent of the audit procedure. So, how many samples are you going to pick? Are you going to pick 100 samples? Are you going to pick 200 samples? So the extent of auditing that you want to do, the samples that you need to pick, is also to be determined beforehand. So planning needs to be done. Planning is to be done for the nature of audit procedures, timing of audit procedures, and extent of audit procedures. How in depth will you go for auditing this particular aspect? Then what is the audit evidence? Audit evidence is the evidence like invoices, like bank statements. They must be collected, because only on the basis of audit evidence you do audit. So audit evidence are the documentary or other proofs that are collected by the auditor. So audit evidence should be proved. Then last is reporting. Guys, audit report should be drafted based on the evidences which are being received by the auditor. Okay, audit report is required to be prepared properly. Then what is the significance of audit? Guys, audit is actually important for all the stakeholders of the company, be it the management, be it the shareholders, be it the lenders, be it the government officials, be it the GST officials, income tax authorities. Everyone requires audited financial statements to know that what are the incomes and expenses that have been earned by this particular assessee. What is the GST payment which is to be done by this particular assessee? So for ascertaining all this, audited financial statements are required. So audited financial statements are useful in that particular respect. So income tax authorities require audited financial statement. GST authorities require them. Financial institutions who have given loans to you require them. Insurance company require them to calculate the damages if you claim insurance. Bankruptcy, insolvency professionals require them. If you have now filed for bankruptcy, you say that I'm bankrupt now, I'm not able to repay my creditors. Then the bankruptcy officials will see your financial statements, whether you are saying true or false. Creditors require your financial statements to settle their dues. Audited financial statements are also referred by management of the company, like board of directors, also see the financial statements if any error and fraud is reported in them. Any moral check is there on the employees. Embezzlement of funds is not there in the company. So all these are purposes which are solved by the management. Improving efficiency, effectiveness, overall functioning of the organization is improved, right? So if you want to improve the efficiency and effectiveness of the organization, then you need to know what are the numbers, what are the financial statements disclosing as of now. After looking at those inefficiencies, you will be able to rectify those inefficiencies. Comparing past results with the current period, you will be able to compare previous year results with the current year results. Settling accounts of the deceased partner. So if in a partnership firm, one of the partner has died, then his share should be given to his legal heir, right? And to compare his shares, to compute the exact amount of his shares of his liability, you need the audited financial statements. What are advantages of audit? Number one, they protect the interest of the stakeholders. Please note that the word is stakeholders and not shareholders. Okay, shareholder means only the people who are carrying shares of the company. Stakeholder means anyone who has any sort of interest in the company. Like creditors are not shareholders, but they are stakeholders. People who have given you loan are not the shareholders, but they are the stakeholders. So stakeholders is a broader term. So the first advantage of audit is that it protects the interests of the stakeholders. Stakeholders will know what are the loopholes in the company, what are the downsides of the company, drawbacks of the company, and is a company working efficiently or not. This information will be disclosed by the audited financial statements. Then the audit also refrains employees from doing any defalcation or embezzlement. So employees will be very smart. Employee would want to siphon off funds. Employee would want to do some hanky panky stuff in the financial statements. They will not do it, because they are aware that at the year end, auditors will come, and at the year end, auditors will require details from them. So the employees will be morally checked if audit is done on a regular basis. They will themselves not do anything which is hanky panky, because they are aware that audit will be done for this particular organization. So it keeps a moral check on the employees. Employees will be scared of doing anything wrong. That is the advantage of audit. Then audit financial statements are considered by authorities like income tax and GST. So any government authority, They would want your audited financial statements, or it is relevant for them. Then if any wastage and losses are there in the company, that is also detected using the financial statements, because financial statements will know what expenses are being done over and above the required amount. Then detection of error and fraud. This is the secondary objective. This is the secondary objective of audit. Error and fraud will be disclosed, will be found out. Audited financial statements will be more reliable for valuation purposes. If valuation is required to be done, then audited financial statements will help in valuation. So why would you value a company? Guys, we value a company in case we are trying to sell the company, or a company is getting merged with another company. Then the value of our company needs to be disclosed, which means how much crores is our company's worth. Based upon its financial statements only, this worth will be calculated. Based upon the fixed assets, total of fixed assets, this worth will be calculated. Banking company, financial institution use audited financial statements to grant loan to the lender. So loan will be granted by banking company by using this particular audited financial statements. Audited financial statements helpful in settling claims of the partners of in case of certain disputes. So claims of the partners will be settled using the audited financial statements. What are the limitations of audit? What are the things that are drawbacks of audit? Guys, audit is not 100%. It is always on test check basis. Test check basis means you might cover 40 to 50% of the transactions while auditing. You cannot cover 100% of the transactions, because guys, in 1 year, an organization can have lakhs and lakhs of transactions. An auditor cannot check all the transaction within a span of 2-3 months. So auditor has to check on a sample basis, and this sampling is a problem with audit. This sampling is a problem with audit. Why? Because what if the samples are erroneous? What if the samples which are collected are erroneous? So test checking is a problem with audit. Audit evidence are not conclusive but persuasive. So in audit, we are restricted not to do investigation. We cannot go beyond our duties in audit. That is another restriction of audit. Inherent limitations like internal controls, like management can override controls. Now, sometimes auditor relies on internal controls. Internal controls, I had already told you, the system of cross-checking the transaction, that is internal control, cross-checking the transaction. Sometimes these internal controls are weak and management can sometimes override them. Management for certain transaction can tell the employees that don't do internal control, then don't do checking. So, management can always override the internal controls. That is a risk which auditor will face always. So, auditor is being told that Sohan is checking work of Mohan, but in reality, Sohan might not be checking the work of Mohan. So management might override the internal controls. Then absence of professional skepticism of auditor. Sometimes there is a carelessness in part of the auditor also. Sometimes the auditor is careless. Sometimes auditor is not, looking at the financial statements in its totality. So that will also pose a threat to audit. So these are the limitations of audit. These are the drawbacks of audit. Then what is distinguishing factor between private audit and statutory audit? First of all, let me tell you what you mean by statute. Statute means the law of the land. Law of the land. So sometimes audit is driven by the law. Sometimes audit is being driven by the management itself. Management wants to conduct audit. That's why audit is being conducted. So this is private audit, which is not driven by law. It is driven by management of the company. And statutory audit means audit which is driven or which is required by the law, right? So statutory audit examples are income tax audit, companies audit, financial statements audit, cost audit. These are examples of statutory audit. Then any audit which is done by the management, that is known as private audit. So what is the distinguishing factor? Appointed by management, and it is appointed by statute or law. For example, Companies Act will tell you which auditor to appoint. So private audit is appointed by management, and the statutory audit is appointed by the law. Scope is decided by the management of private audit. Naturally, guys, if management is appointing the private auditor, then the scope of the audit will also be decided by the management. However, the scope of statutory audit will be decided by the relevant statute. So what do you mean by scope? Scope means what to do, or what to check. What should we check to decide what to do in audit, or to decide what to check in audit? This is known as the scope of audit. So scope of audit is decided by management in case of private audit. Private audit, management will tell you what to check. In case of statutory audit, the scope will be decided by the relevant law. Law will tell you what to check and to what extent should it be checked. Objective is to review internal controls and operations of the business. So the objective of private audit is to review what are the internal controls, whether they are working fine or not, or anything which management wants to check. Management wants to check their sales process, then it can employ a private auditor. However, in case of statutory audit, the audit is to comment on the true and fair view on the overall financial statements. Statutory audit is not restricted to a particular area. Statutory audit is overall audit. Private audit might be restricted to a particular operation or a particular process or an area. Proprietary approach, compliance approach. Now, this is very, very important, guys. Proprietary approach means private audit is driven by the owners of the company. Whatever the owners want to check at their own accord, they will check that. So, whenever owner feels any necessity to get audit done, private audit can be done at that point in time. This is known as proprietary approach. The owner is the guiding factor of this audit. The owner will tell what should be the audit, what should be the area, what should be the scope. Owner will tell everything. However, in case of compliance approach, we are just trying to comply with law. Therefore, we are auditing. Therefore, compliance approach is there in statutory audit. Voluntary in nature, mandatory in nature. This is voluntary. Voluntary means when management wants, it can conduct the audit. When management doesn't want, it can forego the audit. So it is voluntary. Mandatory means statutory compliances are required to be done. Statutorily, this is required to be done. Management may conduct it in 1 year and not conducted in another year, but statutory audit has to be conducted every year without fail. That is mandatory. Then management private audit report is to be given to the management, and in case audit report should be given to the shareholder or the owners. Then there's a distinguishing factor between statutory audit and government audit. Guys, a statutory audit, government audit is also a part of statutory audit, but government audit is driven by certain different principles. Government audit is also actually a statutory audit. So both of them are, so government audit forms part of statutory audit. Statutory audit is a broader view. Government audit is a narrower term. Government audit is a part of statutory audit only. But what is the difference? So statutory audit is applicable to private companies, cooperative societies, proprietorship firms, partnership firms. Government audit is applicable to central government, state government, government departments, statutory corporations. Private audit, owners of the concern appoint the auditors like shareholders. In case of private audit, shareholders appoint the auditor. In case of government audit, it is CAG, a specialized body which is regulated by government of India, that appoints the auditors. The name of the body is Comptroller and Auditor General of India, CAG. CAG appoints the auditor in case of government audit. Audit report submitted to the owners or the shareholders. In case of government audit, the audit report is submitted to the CAG and to the shareholders. Then what is internal audit? Guys, we had studied statutory audit. Now we are studying internal audit. Now internal audit is an audit which is deep diving into the financial statements to see whether the processes, internal controls, accounting systems, reporting systems are working fine or not. Internal audit is done by the management before the statutory audit, so that if statutory auditor comes, he should not be able to find any lacunas or problems in the audit. So internal audit is nothing but a similar kind of audit as statutory audit, but it is done by the management themselves. It is not done by a third-party external expert. That is known as internal audit. So audit of operations and functions of the entity. It includes examination of matters related to finance as well as policies, procedures of the company. Involves evaluation of internal controls and compliances. So internal audit is internally done by the management. Now, what is the distinguishing factor between statutory audit and internal audit? Scope is determined by the Companies Act. In case of statutory audit, scope is determined by the Companies Act. In case of internal audit, the scope is determined by the management. Right? Management will tell what is the scope of internal audit, because management is appointing the internal auditor for their own purposes. Statutory auditor is appointed by the statute, law of land, Companies Act, Income Tax Act, etc. That is statutory audit. Statutory audit is appointed by shareholder. Internal auditor is appointed by the board of directors. Statutory audit can be removed by the shareholders. Internal audit can be removed by the board of directors. Remuneration fixed by the shareholders. Remuneration fixed by the board of directors. So guys, whosoever appoints the auditor, he has the right to fix the remuneration as well. If shareholder is appointing the auditor, then shareholder will fix the remuneration. If board of directors are appointing the auditor, then board of director will fill the remuneration. Report is submitted to the appointing authority, which is shareholder in this particular case. And report is submitted to the board of directors. In case of internal audit, the report is submitted to the board of directors. What is forensic audit? I've already told you it's investigation. It's not actually audit, it's investigation. Involves investigation along with audit. investigation of whether fraud has taken place or not. So usually in scenario of financial statements, the objective of forensic audit is to unearth any fraud which has happened. What is social audit? Guys, social audit is that whether the entity is socially and ethically doing its best to conserve the nature, to not to spread any unethical practices in the environment or in the society. That is known as social or ethical audit. Examination of whether an entity meets its social or ethical objectives. Review of extent of community participation of the business entity towards environment, customer satisfaction, etc. So whatever is the community participation, whatever is the thing that the entity is doing for its communities, that is to be ascertained by social audit. So guys, as it is said that corporate social responsibility should be fulfilled by the entities. They should do something to benefit the society as a whole. So whether they are doing that or not is social audit. Environmental audit, whether the entity is sensitive towards the environment or not, whether they are using carbon saving techniques. Carbon saving techniques, carbon is not emitted in air in a bad way, right? Whether carbon emitting techniques are being used or not, that is environmental audit. So examination of how well entity interacts with its environment, like monitoring emission to air, water and land. Analysis of legal constraints imposed on the entity. Then what is propriety audit? Now, this is very, very important, guys. Propriety audit. So guys, propriety audit is an essential feature of government audit. I'll give you a clear example. Okay, you go and audit Reliance Industries Limited. Reliance Industries Limited board of directors have appointed you to audit their organization. Now the board of directors have purchased certain glasses for drinking water, and those glasses are Swarovski crystal glasses. Very, very expensive glasses. So one glass is worth say 20,000 rupees. Six glasses are worth 1,20,000 rupees. Total value of those glasses are 1,20,000 rupees. Okay. While you are auditing that particular expense, you will ask for the invoice, you got the invoice. You ask for bank statement, you got the bank statement. You asked for the person's signature who transported the goods to your office, you got that. You got everything. Now there's only one question in your mind. Why would someone spend 1,20,000 rupees on a small thing like glass, water glass? Why would someone spend that? Isn't it waste of money? Aren't you wasting money? That's the question which will arise in someone's mind. Guys, in case of a private company audit, you should not ask such questions. The rationale of expenditure is none of your business. Why this expenditure has happened is none of your business. Your business is only to ascertain whether this expenditure is correct or not. That's it. But why has it happened? Why have you spent so much on glasses? You should have purchased glasses from local shop. It would have given you one glass for 10 rupees. Six glass for 60 rupees. Why have you spent 1,20,000 rupees on such trivial thing? You cannot question that in a private company's audit because it's their prerogative. They are big people. They are not mango people. They are not Aam Aadmi. They are not mango people. They are big people. They want to spend money in glass. What is your problem with it? However, in case of government audit, if a government company or government officers spend something which is above normal, then you have the right to question them. Because government audit is propriety audit because public funds are involved. So it is an essential feature of government audit. So in government audit, you also question the rationale of the expenditure. It not only examines the truthfulness and fairness of financial statement, but also ensures that transactions have been carried out prudently. Prudently means intelligently, without wasting anything. Intelligently, the transactions have been carried out. So you have to ensure that the transactions are carried out prudently. Then what do you mean by operational audit? Operational audit means operations and activities of an entity are scrutinized to ascertain whether efficiencies are there or not. That is operational audit. Examination of control structure of the enterprise. Who is controlling whom? What is the hierarchy? How many managers are there? And below each manager, how many sub-managers are there? This is the structure that you need to analyze. Evaluation of whether operating standards are followed. Evaluation of whether overall target capacity utilization is met or not. These are the features of operational audit. What is a continuous audit? Continuous audit means that audit which is carried out during the year. Usually statutory audit starts after the end of the year. After 31st March, the statutory audit starts, right? But in case of continuous audit, it gets carried on in the entire year. It'll go on and on and on. So audit conducted throughout the year at regular intervals is known as continuous audit. Testing of 100% transactions is done using the continuous audit. Errors and irregularities are detected much in advance. Timely finalization of accounts also happens. So it saves a lot of time because the audit is being done as soon as the transaction is being undertaken place. Now guys, typically continuous audit is a typical feature of a bank. Usually companies don't get continuous audit done, that auditors are sitting in the company round the year. This doesn't happen in case of a company. It happens in case of bank. In case of bank, each transaction is audited on a daily basis. Disadvantages: inconvenience for the auditee. Of course, auditee will be always be disturbed because auditor is sitting on the head of the auditee. Time taking: it takes a lot of time. It is also expensive because the staff expense will rise in this case. Then repetitive work, same work will be done again and again. Then what is information system audit? Guys, whatever ERP the management is relying on for preparing its financial statements, that ERP is known as information system. Now, whatever information system is installed in the organization, that will lead to information being communicated to the management, which will lead to decisions being made by the management, right? This is the hierarchy, or this is the chain. Adherence to norms which ensure safeguarding of data. This is the first feature of information system audit. Adherence to norms for maintenance of privacy of personal data. So, employees' salary should not be disclosed to anyone. Then controlling possibility of computer abuse or incorrect data. So whatever incorrect data is there, or whatever computer problem is there, that will be resolved by using the information system audit. Then what is the final audit? Final audit is done at the end of the year. Final audit means the audit which is directed towards closure of audit, and audit report will be made from that particular audit. Interim audit means which is done during half year or quarter year. Now, what do you mean by quarter? Quarter means 3 months, right? Quarter means 3 months. So sometimes what happens is, the auditor will come to your premises and will say that we'll audit 3 months because it's a big organization. Everything cannot be done at the year end. Therefore, the audit will be done on a phased basis. 3 months, 3 months, 3 months, 3 months. So that is known as interim audit, when the audit doesn't get carried out in totality at once. They are carried out in small intervals. Sometimes half yearly audit gets covered. Half yearly audit is covered, then half yearly audit is covered. So half yearly audit is interim audit. So interim audit is when during the year between two final audits, when an audit is done on a half year basis or a quarterly basis, that is known as interim audit. So guys, this finishes our chapter number 1, which is basics of auditing. Now, any questions if you have? This PDF is available on the link. Please see the link which is there on the description box. Please see that link. This description will be there on the link. Okay. PDF is there on that particular link. Please see the link. And if everyone is ready, let me move on to chapter number 2, the second aspect of our syllabus. If you have any questions, please send the questions on the chat box. If you have any questions regarding chapter number 1, please send the questions on the chat box. If you have any questions. Do you have any questions, guys? Please let me know if you have any questions. Please. Otherwise, I'm closing chapter number 1. Chapter number 1 closed. Chapter number 1 closed. Perfect. Should I close chapter number 1? Yes. Should I close chapter number 1? Yes, sir. We close chapter number 1. Okay. Now I'm starting chapter number 2. Please note, guys, that these chapters are available on the Google Drive link, which is there on the description box. Just go to that description box in the Google Drive link. There you will get these chapters. Okay, PDF of these chapters. And remember, these are KPTRs. What do you mean by KPTR? KPTR means, in short, we are discussing all the provisions, not in detail. In short, for revision purposes, these notes are made only for revision purposes. Okay, the purpose of these notes is not to give you the details of all the chapters. It is just a summary. It's a summary for revision purposes. Okay, they are known as KPTR. And yes, guys, if you want the full-fledged chapters, then in this particular YouTube only, there's a playlist. Go on that playlist. You will get the full-fledged chapters also all the chapters of auditing are there on a full-fledged basis on the playlist. Let me show you. Okay, please see this. Let me show you. This is the YouTube channel, right? This is the YouTube channel which you already are aware of, and of course you are a subscriber of this YouTube channel. If you are not a subscriber of this YouTube channel, please subscribe it immediately. This will be of immense help to you right across your journey from foundation, intermediate to final. All right, so if you see playlist of this particular channel, guys, please see the playlist. There will be a playlist for CMA Inter Audit. There will be a playlist for CMA Inter Audit. Where is that playlist of CMA Inter Audit? Yes, this is the playlist, guys. Please see the first playlist. This is the playlist of CMA Inter Audit. This is the playlist of CMA Inter Audit. Now, if you go in this playlist, it has vanished suddenly. I'll go in the playlist. If you open this playlist, guys, here's the playlist. If you open this playlist, then you will get certain certain parts of this playlist. Certain videos are there. You scroll down the videos, and at the end, towards the end, you look at these marathon pictures. Can you see these marathon pictures? These are the marathon videos of CMA Inter. So if you want to see any of the chapter in detail, then you can refer to these videos. There are many videos of auditing marathon. Then there's MCQ practice also. MCQ practice is there in this particular playlist, so you can check out the playlist for MCQ practice as well. Please practice MCQs as far as possible. Okay, sir, got it. So let's start chapter number 2. Chapter number 2. Are we all set? Are we all set? Are we all set for chapter number 2? How's the Josh? How's the Josh? We are already 1.5 hours complete. How's the Josh? Please tell me, how's the Josh in the house? How's the Josh in the house? How's the Josh in the house? Okay, I'll just plug in the charger of my laptop. Just give me 2 seconds. All right. So yes, I can see high Josh, high level of Josh with all of you. We are starting chapter number 2 now. Chapter number 2, again, an important chapter, a small chapter, but yet an important chapter, which you are going to start now. Chapter number 2. Chapter number 2. Now, guys, in this particular chapter, we are going to understand what are the essential elements of an audit. Essential elements of an audit are the audit engagement letter, audit notebook. What do you do in audit? What kind of things are explored in audit? All these things are covered in this particular chapter, like audit engagement, audit program, audit working papers, audit notebook, audit evidences. All these are discussed in this particular chapter, chapter number 2, which we are going to start now. An important chapter. Yes, it will cover, say, 5 to 6 marks in your examination. So what is audit engagement, audit program, audited working papers, audit notebook, audit evidence, audit report, etc. Now, what should contain an audit engagement letter? Now, first thing is engagement letter. Guys, there has to be a formal letter of agreement between the auditor and the auditee for the audit engagement. They should be engaged with each other on a formal basis. So on a piece of paper, both of them should agree that yes, I am Nikkhil Gupta, I'm a cost accountant and I want to do cost audit of your company, and you have engaged me as the cost auditor of your company. For this engagement, I am, I will follow the rules and regulations which are given in the Companies Act. The Companies Act requires mandatory cost audit. I will follow the rules and regulations which are there in the Companies Act, and I will report on the basis of the reporting requirement which is given in the Companies Act. The fees which will be there for this particular cost audit will be paid by you, by the company, right? All these points are written in the engagement letter so that tomorrow there is no miscommunication. Tomorrow there is no confusion in regarding the scope of the audit, or regarding the fees of the audit, or regarding when this fees will be paid. All these things are pre-decided, written in an engagement letter. This engagement letter forms as a as a proof of agreement between the auditor and the auditee. So the first thing that we are going to start is, what is the contents, what is the content of audit engagement letter. So first thing is that audit engagement letter should have objective and scope of engagement. What is the objective of engagement? Why are we entering into this audit engagement letter? That objective should be written. Then what is the scope of engagement? What all should the auditor check? That should also be written in the engagement letter. Now the objective can be like, the Companies Act 2013 requires a cost audit to be done under section 148 of the Companies Act, for every company which is listed therein. Pursuant to that regulation, we are conducting audit, and the objective of this audit is to express true and fair view on the cost statements of the company. Okay, this is the objective. What is the scope? Scope of audit is that the auditor will review the cost information on a test check basis, on a sample basis, and will come to a reasonable conclusion whether the books of cost disclose a true and fair view of or not. This is the scope of the engagement letter. So objective and scope should be clearly defined. What are the regulations that the auditor is going to see? That should be clearly defined. So objective and scope should be clearly defined in the engagement letter. Then what is the management's responsibility? Guys, the engagement letter should clearly mention that it is the management who will prepare the financial statements. Auditor will not prepare the financial statements. Auditor will not prepare the cost sheet. Auditor will not prepare the ledgers or anything else. It will be prepared by the management of the company. So all the financial aspects, all the financial information will be prepared by the management of the company. Everything should be done by the management. Auditor's responsibility is just to check. Auditor's responsibility is not to prepare the financial statements. So this should be clearly written. Then what else will be management's responsibility? Guys, management responsibility will be to provide the supporting documents in a timely manner. Management should provide the supporting documents, should provide the invoices, should provide the agreements, whatever are required by the auditor, in a proper manner, in a regular manner. The management should support the audit team of the auditor. This should be the management's responsibility. So whatever management will do, that should be clearly written in the engagement letter. Existence of inherent limitations. Now, yes, guys, you must have seen a lot of sale. Dhamaka sale, Diwali dhamaka sale. Huge benefits. Diwali dhamaka sale. Ek pe ek free, ek pe ek free, ek pe ek free. Dhamakedar sale, right? You get 100% cashback. 100% cashback if you purchase from this credit card. Such big advertisements are there in newspapers, hoardings, and YouTube and whatnot, right? There's a small asterisk which says conditions apply. And that actually is the biggest point, because there'll be many conditions which will be applied to this offer. And once you read all those conditions, then you will say, oh, it was not as big as they say that it is big, right? Similarly, there are certain limitations of audit. Audit suffers from some drawbacks. So yes, one of the drawback of audit is that it does test checking. It does sampling, because of which the opinion of the auditor is not conclusive. It's not 100% correct. It's only persuasive, which means the correctness which will be ensured by the auditor will only be, say, 60% or 70%. It will not be 100% correct. It will not be 100% correct. So that limitation should be written in the engagement letter. The auditor should clearly mention that I'm just auditing the financial statements. I'm not giving any 100% assurance that everything is okay. Okay, I'm not giving that. I'm just giving a persuasive evidence. So that is limitation which should be mentioned by the auditor in the engagement letter. Need for use of internal auditor. So if the auditor feels, the statutory auditor feels that he needs, to engage some experts, like valuation expert, like actuarial expert, like any other expert the auditor needs to engage, or internal auditor the auditor needs to have the internal audit report, then the auditor should mention in the engagement letter that I need to rely on the work which is done by external experts also, because I'm not a valuation expert. I'm not an internal audit, so I'm not an internal audit expert. So I will rely on the information which is given by the internal auditor or the valuation expert to me. But at the end of the day, guys, I've already told you, responsibility will be of the auditor only. Okay. If anything goes wrong, responsibility will be of the auditor only. Yes, he can mention that I will rely or I will use the work of an external person, but the ultimate the responsibility will be of the auditor. Management confirmation letter. So management should give a confirmation letter that yes, management wants to hire this particular company, and management confirms that the books of accounts are free from any error, there is no mistake, there is no fraud, and management should give it in writing that yes, everything is accounted for, there's no transaction which is not accounted for, and there's no fraud which has been unearthed. Then restriction or limitation of auditor's liability. So if any auditor's liability is restricted, then that should also be mentioned in the audit report. For example, if tomorrow, suppose, any liability arises against the company, so if creditors claim that, oh, our liability was much more than what was disclosed in the balance sheet, and even auditor didn't see it, then you cannot hold the auditor responsible. You cannot say that, auditor, we will recover this amount from you because you have not done your audit correctly. Creditor cannot say that. So auditor's liability will be restricted. Auditor cannot have a liability that yes, so if auditor reports something wrong, then creditor will come back to auditor and say, auditor, you reported this thing wrong, we will charge this particular liability from you. Creditor cannot say that. Loan person, bank, cannot say that. Auditor's liability is limited. So this should be mentioned in the auditor's report. Auditor's liability generally is limited to the audit fees. So at max, the auditor can forego its audit fees, nothing more than that. This is written in the engagement letter. Basis of computation of audit fees, how is audit fee computed? This is written in the engagement letter. Billing arrangement, when this fee will be given to the auditor, this will be written. Form of report, what reporting the audit report form will be used? Obviously, as specified in the Companies Act will be used. Other communication of engagement, validity of report, till when will the report be valid? That will be given. Limits on submission of report to other authorities. So auditor can say to the management that this particular report should not be submitted to any non-statutory authority. This is to be only submitted to Government of India, Income Tax Authority, GST Authority, etc., etc. This can be given as an acknowledgement to the auditor. Then what is an audit program? Guys, audit program is nothing but planning of audit. Okay. So for example, whenever you plan a picnic, I want to go to picnic with my family, right? When I want to go to picnic with my family, I will plan certain things. I will plan where to go. I will plan who all will go along with me, right? I will plan where to go. I will plan who all will go along with me. So all this planning will be required to be done when I am doing planning of a picnic. If I want to go to picnic to anywhere, right? Who all will go? Then I will analyze what food do we need during that picnic hours, what food should we eat, what food should we need. That will be part of the planning process. Then what drinks do we need to accomplish, or do we need any extracurricular activities? Do we need some board games, or should we need some ludo? Do we need some subsidy? Do we need some cards to play over there? So all this is planning, right? Similarly, before audit also, you need to plan. How many people are required in this particular audit? How many qualified CMAs are required? How many semi-qualified CMAs are required? What procedures are you going to employ during this audit? All this needs to be planned. So next aspect is audit program, which is nothing but planning and audit. How do you plan an audit? It is using this audit program. Detailed plan of auditing work is required to be made. Procedure to be followed. First of all, the procedure which is required to be followed in audit for verification. Estimated time which is required. Description of work. What work is required to be done. Assigning responsibility to each audit assistant. How many audit assistants are required and who will do what work? This will be part of audit planning. Arranging, distributing the audit work. How will audit work be distributed amongst various people? How will it be arranged amongst various people? That is part of audit planning, audit program. Advantages, it makes a proper systematic allocation of work to audit assistants. Existence of checklist ensures none of the audit procedure is omitted. So checklist will definitely be there in case of audit. and that checklist ensure that nothing misses out, right? Like, on the day of picnic, we will say that, okay, we have kept the food, we have kept water, we have kept bed sheet, all this thing. There'll be a checklist, right? Similar checklist will be there in case of audit also, that yes, we have audited debtors, we have audited creditors, we have audited fixed assets. This is known as a checklist. Individual responsibility for work may be assigned, so everyone knows what work they have to do. Serves as a guide for planning audit for subsequent years as well. So for subsequent years also, you can plan the work accordingly. Disadvantages: same audit program cannot be used for all the entities. Okay, one plan cannot be used for all the entities. So guys, you have made a picnic program for, say, within Delhi. If you stay in Delhi, then within Delhi you have made a picnic program. That same picnic program cannot be applicable if you are making a picnic program for outside Delhi, right? So there'll be a difference between the picnic program of within Delhi and outside Delhi. This difference will always be there, because if you're going outside Delhi, then you will need transportation. You will need some amount of carrying your goods from one state to another state. So you need transportation. You need all those stuff. So planning an audit which is to be done of a smaller entity will be a different audit. Planning an audit of a larger entity will be a different kind of a planning. So planning will vary from entity to entity. Different entities will have different form of planning audit. Unnecessary for small concerns. Sometimes very small concerns do not require any planning. You directly go over there, check them, because they're very small already. If any procedure is missed from the program, it will not be done. Now, this is a major drawback. If you miss out something while writing in the checklist, then you will not be able to do it, right? So checklist has to be robust. It has to be complete in all respects. Auditor task becomes mechanical. So auditor will just follow the audit program blindly. He will not apply his mind. So sometimes when, I tell you that, okay, go and fetch me water from the water tank, which is situated in the floor, which is given below. You will just follow my instruction. You will go over there, water tank, you will fill the water and come back to me. If that water tank is empty, then you will say that, sir, water tank was empty. But then in that floor only, there was a Bisleri bottle which was kept in that floor. You will not apply your brain that, yes, Bisleri is kept, then I should take Bisleri for sir. You will not apply your brain, because I have given you instruction that fetch water from the water tank for me. If I would have told you that fetch water, then you would have seen water tank. You have also seen Bisleri. You would have got Bisleri. So audit program suffers from this drawback that audit becomes mechanical. You will do whatever is written in the audit program. You might not apply your brain. That is a disadvantage of audit program. Now, what do you mean audit working papers? Very, very important, guys. The documentation which is required to be done in audit, the documents or the working papers which are required to be prepared in audit, they are known as audit working papers. They are the record of planning and execution of audit engagement. They are evidence that audit work is performed. And I've already told you that if you do not document your audit well, then I will presume that you have not audited. If you have not documented your audit well, I will presume that you have not done your auditing. Your auditing is not done. I will presume that. Okay. If you have not documented your audit program, your audit work. So your audit work should be documented. Now there are two types of audit files: permanent audit file, current audit file. Okay. Now, please understand the difference. So there's a rent agreement which spans to, say, 5 years. Okay. Now that rent agreement is given to you in year 1 by the company. Company says, this is my rent agreement according to which I'm paying the rent. You please check my expenditure of rent using these rent agreement. Next year, again, you need that rent agreement for checking the next year's rent. You again go to the management. Management will tell you, oh, I had given you earlier year. I had given you in the last year. I had already given you this agreement to you. Now I'm not going to give you again. Why are you asking it from me again and again? Then you will tell the management, oh, that was given in the earlier year. It was just kept in the old file. I don't have the access of the old file. This is wrong. You should always have two files. One is a permanent audit file. Second is a current audit file. Permanent audit file should contain the documents which will be used for more than 1 years, so that you need not ask for those things from the management again and again and again. So permanent audit file should contain the audit files or the audit papers which are used for more than 1 year. That is the permanent audit file. And current audit file should contain the documents which pertain to only that year. Like I'll give you an example, okay? And you tell me whether it is a matter of a permanent audit file or a current audit file, okay? Memorandum of association, article of association. Please write in the chat box. Is it PAF, permanent audit file, or CAF, current audit file? PAF or CAF? memorandum of association and articles of association. Whether it is a matter of permanent audit file or a current audit file, please write in the chat box. Fastest fingers first. PAF or CAF? Memorandum of association and articles of association. PAF or CAF? Khushwant, Gaurav, JR, Pooja, Vijay Lakshmi, Kirti, Danyan Sagar, Amarjeet, Ishita, PF, Radhakrishnan, Rushikesh, very good. Rushikesh, Radhakrishnan, very good, very good. Chirayu, Rawat, Vivek Sharma, Radhakrishnan, very good, guys, very good. Permanent audit file. Why permanent audit files, sir? Because this will be referred to us by again and again and again. Every year we need this document, Memorandum of Association, Article of Association. We need to read it again and again. We might need to refer it again and again. And this is one document which is to be used for, say, 10 years or 20 years. It doesn't change every year. It doesn't change every year. It remains the same for n number of years. So yes, this is a permanent audit file thing. So permanent audit file contains working papers which are used for more than one accounting period. Permanent audit file is a file which contains papers which is used for more than one accounting period. Current audit file is a file which uses documents which pertains to only one accounting year. Only one accounting year documents which are used. For example, profit and loss account of that particular year will finish in that particular year itself. It will not be carried forward to the next year. So engagement letter, board minutes, meeting, evidences of financial statement. These are all current audit file things. Memorandum of association are all permanent audit file things. Evaluation of internal controls, whether they are weak or no. These are permanent audit file things. Then evaluation of management letter, assumptions which are given by management. Assumption might change every year. Management will give you a fresh management letter. Significant ratio analysis. This is a permanent audit file. Analysis of transaction balances of current year. Notes regarding significant accounting policies. Accounting policies do not change every year. They remain the same, right? So this will be permanent audit file. Then notes on audit program. Audit program might change year on year. There might be some tweaking, some change in the audit program year to year. Contains significant audit observations of prior years. So if you have observations of prior years, then it will be contained in permanent audit file. Current audit file, it will contain conclusion of significant audit of current year. It will contain conclusion of the current year. Permanent audit file will contain observation of the prior years. What do you mean by audit notebook? Guys, audit notebook is nothing but the register which you are carrying, okay? The register which you carry to my class daily. The register which you carry to my class daily. So, you know, the register which you carry to my class daily, whatever instructions I give, you write on that. Okay, sir has taught us audit today. Sir has taught us permanent audit file today. You always write whatever is being taught in the class, right? Similarly, audit notebook is also a notebook which auditor carries to note down whatever has been done during the course of the audit. It is a bound book. Your register is also bound register. It contains there is a separate, so it contains the observations which are made during audit. Just like you make observations during my class, you write it in the register. Similarly, during audit, if you want to write anything in your register, that is known as audit notebook. Nothing fancy, nothing difficult. It is separate for each year. Just like you have separate notebook for each subject, this is also separate for each year, and each class you have a separate notebook. Forms part of audit working paper and records. Serves as an evidence. What work have you done? It will be evidenced by this audit notebook. It should be clear, complete, and systematic. Contains information like name of organization, MOA, AOA, etc. Now, very, very important aspect, guys. Very, very important aspect after audit notebook. Audit risk. What do you mean by audit risk? Guys, there is a risk in audit. What is that risk? Risk is that there is a misexpression by the auditor. Auditor does not give a true and fair view. Auditor says that everything is true and fair, but it is not true and fair. There's a risk in audit. Okay, please tell me, what do you mean by risk? Forget about audit. What do you mean by risk? What do you mean by risk? What is the risk? So, you know, suppose there is a boy in our class. The name of the boy is, say, Bharat Goel. Bharat Goel is the boy in our class. Okay. Bharat Goel likes a girl of our class and he wants to propose that girl. Name of that girl is Rohini. Rohini is also messaging PF. So I'm taking names from the live students chat only, guys. Okay. And, you know, this is purely fictional and it does not contain resemblance to anything live or dead. Okay. Please don't, construe that Bharat and Rohini have some connect. Bharat wants to propose Rohini. Okay. Bharat wants to propose Rohini. In one fine day in my class, Bharat takes a red rose flower, and he proposes Rohini. Okay. Bharat proposes Rohini using the flower that Rohini, I like you very much. What might be the repercussions? What might be the repercussions? So Bharat would want the repercussion that yes, Rohini should also say, oh, even I like you so much. You know, the day when you had joined the class, I was thinking that I want to make friendship with this boy, Bharat. So Bharat wants this outcome, okay? But what can be the reverse outcome? What can happen? What can be the reverse outcome, okay? Please write in the chat box, what can be the reverse outcome? Bharat Goyal, if he proposes Rohini with an expectation that Rohini will say a yes, what can be the reverse outcome? What can happen in this particular case? Please tell me in the chat. Oh, slap. Kirti Batra is saying slap. Kirti Batra is saying slap. Kirti Batra, so rude. You can even say a no. Why a slap? Why are always girls so aggressive? I don't know why are girls always so aggressive that they directly turn physical, physical violence. What else can be the chappal on face of Bharat? Abhishek Mathur is even more violent. Chappal on face of Bharat. She might reject. Yes, Deepthi is a little subtle girl, not very violent. Deepthi believes in non-violence. Deepthi is saying she might reject. Yes, she might reject. Chappal on face. Accept or reject. Yes, Sagar is saying accept or reject. Gaurav Saha is laughing. Gaurav saying reject. Okay, perfect, guys. Perfect. Yes, the risk is that he might face a rejection. He might not attain the desired outcome. He might not attain the desired outcome. This is known as risk. So, first of all, please understand the meaning of risk. Risk means that you do not attain the desired outcome. You do not attain the desired outcome. You wanted a desired outcome and you do not attain a desired outcome. Now, please tell me, what is the desired outcome of audit? The desired outcome of audit is that we report in a true and fair manner. We report everything which is correct. Now, suppose the auditor reports true and fair view in a particular financial statements where the financial statements are not true and fair. That is audit risk. Audit risk is misreporting or wrong reporting the conclusions. The expression which auditor gives, it is wrong, it is erroneous. That is known as audit risk. So audit risk is misreporting. There is an error which creeps in the expression of the auditor. Auditor is saying everything is correct, but nothing is correct. Or it can be vice versa also. Auditor is saying everything is incorrect, but it is not so. Everything is correct. Auditor is mistakenly saying that everything is incorrect. So not attaining the desired outcome is known as risk. And audit outcome is to express true and fair opinion. If you do not express true and fair opinion, auditor did not, analyze the books well. That can be a reason. This is known as audit risk. The risk that auditor gives an inappropriate audit opinion. When the auditor gives an inappropriate audit opinion, that is known as audit risk. Dikshit is active now. When you talk about studies, Dikshit is not active. When you talk about extracurricular things or some fun elements, then Dikshit becomes active and he writes a hi. Very good. Rohini is saying reject. Rohini is saying reject. Okay, Rohini. Unfortunately, Bharat, apologies. Rohini has rejected your offer. Okay. So risk that auditor gives an inappropriate audit opinion is the audit risk. The auditor will say that no, everything is fine, but nothing is fine. That is an audit risk. It is factor of inherent risk, control risk, and detection risk. So audit risk is due to three reasons. Audit risk is due to three reasons. Number one, inherent risk. Number two, control risk. Number three, detection risk. Now, what is inherent risk? Inherent risk is that some account balances are inherently risky. For example, if you are making a provision of expenses, guys, provision for expenses is an estimate. It is a tukka, and tukka can go wrong. Estimate can go wrong. Auditor cannot do anything about it. So provisions can go wrong. This is an inherent limitation. This is an inherent problem. So the risk which are inherently there in the financial statements, which are there in the financial statements as per their nature, as per their their nature, their characteristic, that is known as inherent risk. So there are certain account heads which are risky. The possibility of reporting wrong numbers in those heads is obvious, like provision for bad debt. How do you know that this particular person will become bad? He will become bankrupt. How do you know? It is just your tukka. It is just an estimate. It is just a fluke. So this is inherent risk. Next is control risk. Now I told you about internal controls, which means that one transaction is being checked by some other person. What if the other person is not checking that transaction? The auditor will rely on that other person, that yes, other person has checked the transaction, I will not check it. Auditor has relied on the internal control, but what if the other person has not checked the transaction? What if the controls fail? What if control fail? Controls, auditor relies on these controls, and what if the control fails? Control is not happening. So control risk is the second risk. Third is the detection risk. Detection risk means it is the error of the auditor. The auditor is not vigilant enough. Mistake has been done by the auditor in choosing the correct audit procedure. Mistake is done by the auditor in choosing the wrong audit nature of the audit procedure. For example, guys, there's a risky account which is sales. Sales should be checked almost to the extent of 60 to 70%, but the auditor is checking sales only to the extent of 10%. Why? Sales should be checked at a higher number because it's a risky account. This is fault of the auditor. This is detection risk. Audit has not been able to detect the risk. This is detection risk. So these are the three kinds of risk: inherent risk, control risk, detection risk, because of which overall audit becomes risky. So these are three types of risks which make audit risk. Dikshit is saying sorry. What sorry? Okay, next is audit evidence. What do you mean by audit evidence? Audit evidence is the set of facts and reasons which are accumulated during the audit process. So whatever evidence you gather, like vouchers, like your management records, whatever evidence you gather, that is known as audit evidence. They form basis of audit conclusion. Audit conclusion are drawn using the audit evidence. Audit evidence should be reasonable and sufficient. They should be reasonable means they should be having a bearing on your conclusion. They should be conclusive enough, and they should be sufficient. Evidence should be good enough. Evidence should be sufficient. They should provide reasonable assurance on the assertions of the management. So whatever management is claiming that it is correct, the audit evidence should provide reasonable assurance on those assertions. So if management is saying that we have assets worth rupees 10 crores, you should have invoices worth rupees 10 crores also. You should have fixed assets kept at your plant also worth rupees 10 crores. So all these things should be there with respect to the transactions. Audit evidence should be strong enough. Audit evidence may be internal or external. Both the kinds of audit evidence is there. External evidence are more reliable than internal evidence. So evidence can be internal or external. Internal evidence means the evidence which are created by the management itself. That is known as internal evidence. And external evidence means evidence which is created by someone else. So for example, if you sell a product, then the invoice is being made by the management itself. It's a less reliable evidence. But if you purchase something, then the invoice is created by the person who's selling the good. That is a more reliable evidence. So external evidence are more reliable than internal evidence. If management is creating something, that is internal evidence. And if you are relying on evidence which is provided by someone else, that is an external evidence. So external evidence are more reliable. Then test of controls. Now this is very, very important, guys. Test of controls means whatever internal controls are there in the management, if we test them and if we think that they are working fine, then as an auditor, I'll be reasonably assured that if control is working fine, then the audited financial statements are also fine. These are known as test of controls. So guys, in certain account heads, I will only check the controls. I will not check the entire transactions. I will check that yes, controls are working fine. I'm fine. This transaction is working fine. In certain low priority account heads, I might only check the internal controls, right? That is known as control testing. I'm testing whether controls which I employed to make sure that transaction is recorded properly, those controls are fine. So these are known as test of controls. But if I have certain very, very important account heads, and if I feel that controls are not that strong, then I will have test of details. I'll give you example of test of controls and test of details, both, okay? I will give you example of both of them, okay? Now, again, I want 2 volunteers in my class, 1 girl and 1 boy. Okay, I want 2 volunteers. Whom should I take? 1 girl, 1 boy. I want 2 volunteers. 2 volunteers who can volunteer for my example. Okay, 2 volunteers. Who can be the 2 volunteers? You can raise your hands if you want to be a volunteer. Please raise your hands if you want to be a volunteer. Okay, any volunteer. Okay, let's take the volunteer as Dikshit. Dikshit is the volunteer. Okay, Dikshit is the boy of our class. Okay. One girl. I want one girl also. One girl. Okay. I'll take Kanav and Devaki in the next round. One girl. One girl. One girl. I've already chosen the boy. Any girl who wants to volunteer? Bharat Goyal again wants to volunteer. Bharat, your proposal was rejected earlier. Now you want to volunteer again? Okay. So I'll pick up a girl. And the name of the girl is Deepti Raut. Okay. Deepti Raut is the girl. Okay. So Dikshit and Deepti Rao. Dikshit is the boy in my class and Deepti Rao is girlfriend of Dikshit. Okay. Please note that all the examples which are given herein are absolutely fictional. They bear no resemblance to anyone living or dead. Dikshit has got a girlfriend which is Deepti. Now, Deepti feels that Dikshit is, doing some hanky-panky stuff in the garb of saying that I'm going to coaching. Dikshit goes to coaching. Deepti feels that the coaching which Dikshit goes to, I think there's something wrong over there. So what does Deepti do? Deepti, before half an hour of the coaching time, Deepti calls up, sister of Dikshit and asks her whether Dikshit has left for the coaching. The girl says that yes, Dikshit has left for the coaching. Then Deepti calls up the receptionist, okay, and then asks the receptionist, "Reception ma'am, has Dikshit come to the coaching?" Yes, Dikshit has come to the coaching. So Dikshit is inside the coaching, okay. Then when Dikshit leaves the coaching, then reception ma'am again confirms to Deepti that yes, Dikshit has left now. And then Deepti calls up home of Dikshit and asks Dikshit's sister whether Dikshit has reached home or not. This way, Deepti has audited the entire transaction using certain control points. Certain control points have been checked, and using those control points, the entire transaction is audited, and it is made sure that Dikshit is going to coaching only and he's not going to anywhere else. Dikshit doesn't have any extramarital affair. This is proved by this particular control testing, which who has done? Deepti has done on Dikshit. Okay, this is an example of control testing. Now, the point is that there may be a situation where Dikshit has bribed Dikshit's sister and Dikshit has bribed the receptionist which is sitting at the coaching center. Dikshit has bribed both of them. Dikshit has told his sister that, okay, I will give you a Cadbury silk, dairy milk silk, if you say lie to my girlfriend. And similar remuneration is being given to the receptionist also for saying this lie. This is how controls lapse, because the management can override controls. This is how controls lapse. So controls have a big risk that they can lapse because management is the owner of the controls. Management can, lapse the controls immediately. So controls can be ineffective. This is the conclusion of the matter. Now, to all the girls over here who are relying on these controls, what is the solution? The solution is you should employ a detective. You should employ a person who can be with Dikshit all the time. There should be a person on the motorcycle. There should be a person on the motorcycle. He should be with Dikshit all the time. When Dikshit leaves home, he should follow Dikshit. Wherever Dikshit goes, he should click pictures of Dikshit and give to Deepti. This should be the correct way of auditing. This is known as test of details. In my investigation, in my detective option, we are testing the entire transaction in detail. This is test of detail. In my earlier example, I was testing the controls, and controls might lapse. This is the difference between control testing and test of details. Now, the problem with test of details is that test of details is very expensive and very time taking. So all the account heads cannot be tested using test of details. So now the management has to the management has to decide which account head has to be audited using test of details, which account head should be audited using test of controls. Management has to decide whether the account head is important or not, because we cannot afford to employ test of details in all the account heads because it will be very expensive. It will be very time consuming. So these are the two things which I'm going to discuss now: test of controls and test of details. When you analyze the transaction in detail, that is known as test of detail. When you only check the control points, that is known as test of controls. Test of effectiveness of internal controls. Gather evidence on operational effectiveness of the internal control procedure. So auditor relies on internal controls. It does not check the entire transaction. It only checks the important checkpoints, important controls. If the controls are strong, auditor can place reliance on them and can reduce the effort on substantive procedures. Substantive means test of details. Auditor will not employ test of details. Auditor will not employ test of details if controls are strong. But if the auditor thinks that controls are weak and if the management is very smart, then test of details will be employed. This employs a complete check of the validity and completeness of accuracy of financial statements. The substantive procedure are of two types: analytical substantive procedure and test of details. These are two types of substantive procedures. Finally, the audit report. Audit report is the ultimate and final output of audit procedure, guys. Audit report is the end of the auditing. Okay? We need to prepare the audit report in the format which is given in the Companies Act. Format is to be followed word by word. It is very, very important. And the audit report should be clear and concise. All the things should be followed properly. Reflects auditor's opinion. Audit report contains the auditor's opinion. Then report should be clear and concise. Audit report should be absolutely perfect. All right, this gives us the end of our chapter number 2. Any questions, guys? Or I'll open chapter number 3. Any questions? Please tell me if you have any questions. Any questions which you have? I'm open to questions now from chapter number 2, or I'll start chapter number 3 if you don't have any questions. Super sir, nice explanation. Yes, hit a like button on the video, guys. If you're liking the explanation, if you're enjoying the session, please hit a like on the video and please stay with me till the very end. Sir, when will this live session end? Even I don't know. Even I don't know when will this live session end. This live session will end earlier of the two situations. Earlier of the two situations. Number one, our course get finished or I get fainted. Earlier of the two situations, the live session will end. Earlier of the two situations. Situation number one, the course will finish. Situation number two, when I faint. Okay. Earlier of the two situations, the live session will end. बहुत गलत किया सर आपने आज. दीक्षित दीक्षित is saying बहुत गलत किया सर आपने आज. अरे एग्जाम्पल ही तो लिया है दीक्षित. तुम भावुक क्यों हो रहे हो? हद हो गई है तो. भावुक क्यों हो रहे हो तुम दीक्षित? एग्जाम्पल ही तो लिया है. अच्छा, अरे ब्रेकफास्ट के लिए 5 मिनट चाहिए तुम्हें. अरे ब्रेकफास्ट तो साथ साथ कर लो ना. सुनते रहो मेरी कहानी और ब्रेकफास्ट करते रहो. ब्रेकफास्ट के लिए 5 मिनट का ब्रेक क्यों चाहिए? अच्छा ठीक है, तो फिर 2 मिनट का ब्रेक लेते हैं. ठीक है, 2 मिनट का ब्रेक लेते हैं. अच्छा, 2 मिनट के ब्रेक पे जाने से पहले हाउस द जोश, हाउस द जोश, आई वांट टू नो द जोश. चैप्टर नंबर 3 को स्टार्ट करने से पहले हाउस द जोश, टेल मी हाउस द जोश. ये इनकम टैक्स के प्रोविजन की तरह अर्लियर ऑफ द फॉलोइंग. यस कीर्ति बत्रा, बिल्कुल अर्लियर ऑफ द फॉलोइंग. हाउस द जोश गाइस, प्लीज राइट इन द चैट बॉक्स. संजय संजू इज सेइंग वेयर आर यू फ्रॉम? Sanjay, I am from Delhi. I am from Delhi. Hi, sir. Hi, sir. Yes. Weightage for 4 chapters. These 2 chapters. Hi, sir. Everything is high, sir. Yes. Weed say very high, sir. Deepti saying weed say very high, sir. Brilliant, Deepti. Very good. Good, good, good. Rohini, Pacific, Ishita. Hi, sir. Devaki. Sarabjana. Sir, method of audit evidence. Method of collecting audit evidence. So audit evidence are of 2 types, internal and external audit evidence. Hi, sir. All right, so let's take a break for 2 minutes. I'm not ending this live session. This live session will continue as it is. Just a break for 2 minutes. Just a water break, okay? If you want to have breakfast, then you can take it along with the video lecture. This session, we'll have breakfast along with the session, okay? All right, 2 minutes break. All right, let's start again. Chapter number 3. Chapter number 3 is what we are going to start now. How's the Josh in the room? Should we start chapter number 3? Yes, sir. Josh is the highest. Highest, sir. So Abhishek is saying highest, sir. Very good. Good. Yes, now we'll be starting chapter number 3. And yes, an important chapter of your syllabus, which is internal check, internal control, internal audit, vouching, and verification. These are certain important things which are with respect to audit. These are the auditing features, auditing techniques which are there. So we start chapter number 3. Chapter number 3, internal controls, internal check, internal audit, vouching, and verification. Khushwan says, hi, sir. I experienced that a cost auditor done tax audit and others beyond the scope of his duties using common skill of the statutory auditor. Does this cause any liability to both of the auditors? Yes, it will cause major liability to both the auditors. Both the auditors will be subject to penalty. They will be subject to strict provision. They will be reprimanded by the Companies Act. They will be reprimanded by the Institute of Cost Accountants of India or Institute of Chartered Accountants of India. So everything will be against the two auditors. This is a very big offense which Khushwant is discussing. All right, so let's start chapter number 3. Guys, I've already told you, what do you mean by internal controls and internal checks? Internal checks means a transaction accounting entry which happens should be checked as soon as it happens. So that simultaneous checking of accounting entries is known as internal controls and internal checks. Okay. Now, internal controls has two elements to it: internal check and internal audit. So how do management control that all the transactions are working fine, all the transactions are done fine? How do they control it? Using two things. One is internal check, that they check that a transaction which happens should actually be checked as soon as it happens, internal check. And then internal audit, they hire a person, an auditor, before statutory auditor comes in. They hire an auditor, and auditor will again check the entire transaction. That is internal audit. So internal check happens as soon as the transaction happens. The internal check happens there and then. Internal audit happens afterwards, after 4 months or 3 months. When internal auditor comes, he will check the transaction again. So both of these combined together will form internal control. Now statutory auditor, which is a third party, will rely on this internal control in a very major way. If these internal controls are strong, if they are positive, if they are strong, if they are positive, then if the internal controls are positive, then guys, the statutory auditor will rely on the internal auditor, will rely on these internal controls. If these controls are not that strong, if these controls are not that strengthful, then statutory auditor will employ different levels of other checks, different levels of other activities internal auditor will statutory auditor will undergo. So these are internal controls. Now, what is the objective of internal control? Objective of internal control is the internal control system comprises all the methods and procedures adopted with the objective of safeguarding of assets, prevention and detection of error or fraud. So first objective is safeguarding of asset. The asset should be safeguarded. The asset should be safe in the company. It should not be so that some asset is being taken by some employee steals away some asset. So the safeguarding of asset is one of the very important thing. Now I'll tell you a very simple example, guys. There is a person who deposits cash in bank. Okay, he takes cash from the store and he deposits it in bank every day. Okay, now to ensure that person is not stealing any cash, there should be another person who makes a check on how much cash did he take to the bank and how much did he deposit to the bank. Let me repeat. There's a person who takes cash from the store. We have a general store, grocery store, where we have cash collections. A person collects cash from that store and he deposits in bank. There should be an internal check. There should be another person who checks that the amount that he takes from the store and the amount which is deposited in the bank is the same. There should be reconciliation entry. This is the point of safeguarding of asset. The assets of the company should be safeguarded. This is the objective of internal control. Then prevention and detection of error and fraud. Errors and fraud should be avoided. They should be prevented and detected. Checking accuracy and completeness of accounting records. Accounting records should be absolutely correct, absolutely perfect. Checking that is also an important objective of internal control. Ensuring compliance with law. Whatever legal provisions are under way, under process, like Companies Act, like Income Tax Act, all these should be followed. They should be checked by the internal control person. Ensuring optimum utilization of resources. Whatever resources of the organization are there, they should be optimally utilized. They should be fully utilized. That is an objective. Efficient conduct of business. The conduct of business should be perfect. Ensure adherence to management policies. Whatever management policies are there, they should be adhered to. they should be properly followed. Internal controls contain two things: internal check and internal audit. Now, what is internal check? Internal check is division of work. So one entire transaction is done by two people, right? It is split of the transaction. It is done by two people. Then that is internal check. Functional responsibilities are also divided. Okay. So I'll give you an example. Okay. Now, rather than one person picking up the cash from the store and depositing it to a bank, let's split the transaction into two people. First person will pick up the cash from the store, count it, give it to the second person. Second person will deposit it in bank. This ways, one transaction is being checked by two people. One transaction is being checked by two people. So the cash will be counted first by the first person, secondly by the second person. This will ensure double checking of that transaction. So this is known as division of work. Work should be divided into two people so that both of them check it, and twice checking happens. This is done by management of the company. Authorization and assignment of duties. Now, now in many organizations, guys, expenditure worth rupees 10 lakhs or above should be authorized or approved only by managing director of the company. This is known as authorization. So authorization ensures that all the transactions happen in a fair way. And assignment of duties should be assigned to each and every person who's doing that particular duty. Assignment should be done. Then review approval of all transactions before they are recorded in the books of accounts. The transaction should be checked properly. Approval should be seen properly before they are recorded in the books of accounts. Competent personnel. There should be people who are handling the transaction should be competent enough. Should be people of well repute, like a CMA. If he is doing some entry, then a CMA knows that how difficult is it to qualify CMA examination. So a CMA will not get himself involved in some error of fraud, because if his degree is snatched and if he is required to give CMA final exam again, then he only knows how difficult is it to give the CMA exam again. So competent person should be kept on important things so that they themselves have integrity and honesty, that they do not do some hanky panky stuff. Safeguard of all business assets. All business assets should be are safeguarded using internal checks. Then what is internal audit? Internal audit is that some qualified person comes to the organization and checks everything. That is known as internal audit. Depending upon the size of the organization, if the organization is big, then internal audit happens say thrice or four times a year. If the size of organization is small, internal audit may happen only once a year. Okay. Qualified person should do it. Types of internal controls. So what are the kinds of internal controls? How many internal controls are there? How many types of internal controls are there? First is preventive control. Second is detective control. Third is corrective control. So first is preventive control. Preventive control ensures that the error does not happen. It ensures that it avoids errors. Okay. For example, segregation of duties. So two people managing one activity will ensure that the transaction is not erroneous. Preventive control. Then detective control. If some error happens, then that should be detected early, like bank reconciliation statement. So the cash book disposes that cash worth 1 lakh was deposited in bank. However, in bank only 80,000 was there. Where is to 20,000? That will be detective control. That will be disclosed by reconciliation. So after every week, the cash book should be reconciled with the bank, so that we know that cash was 1 lakh, deposited in bank was 80,000. Where is the balance? This is known as detective control. Third is corrective control. Corrective control means when error or irregularity has happened, what steps needs to be taken to correct that particular control. Like when we know that there is a reconciliation difference, how can we bridge that reconciliation difference? How can we approach two people who are doing this cash transaction? How can we approach them to ensure that this difference is bridged? Okay, that is the corrective control. Corrective control, preventive control, and detective control are the three kinds of controls which are there. The nature and scope of internal control. What are the nature and scope of internal control? The internal control should be efficient and effective in conduct and the management of any organization. So the nature and scope of internal control is that internal control should be efficient and should be effective in conducting the business properly of a business organization. That is the first prerequisite, the first nature and scope of internal control. Second one is Second one is ensures adherence to management policies. So the internal controls make sure that management policies are adhered to, management policies are followed. That insurance is given by the internal controls. Third is safeguarding of organization assets. Organization assets are safeguarded. Organization assets are are properly safeguarded. They are protected against any theft, against any misappropriation. That is the importance of internal control. Then prevention and detection of error and fraud. Internal control will make sure that errors do not happen, ensure accuracy and completeness of accounting records, ensure timely preparation of financial information. Financial information will be prepared on time if internal controls are working well, because internal controls will make sure that errors and frauds are less. If they are less, then it will take lesser time to prepare the financial information. Then what are the limitations of internal controls? There are certain limitations of internal controls. Internal controls might not be as effective sometimes. So if there's a deficiency in organization structure, it makes the internal controls ineffective. So if the internal organization structure is inefficient, if the internal structure is deficient, then the internal controls have limited applicability. Small organizations have limited internal controls. If your organization is small, then internal controls are also small. So if you do not have two people to check one transaction, if you have a small organization, you do not have two people to check one transaction, how can you employ internal controls? Internal controls can be used for unusual transactions. So whatever unusual transactions happen, those can be checked by internal controls. Can't be used for unusual transaction. So internal controls are always employed on usual transaction, like sales, like purchases, like salary. If unusual transaction happens, like you sold building of your office, then that cannot be checked by internal controls. So that is a problem. Implementation of internal controls is costly. So internal controls implementation takes a lot of cost. Top level management may interfere with internal controls. Now, this is very, very important point, that management can anytime override the controls. It can anytime break the controls. That is the most important thing. Control system may become redundant if not updated at a regular point of time. So it should be updated regularly. Internal controls should be updated regularly. Now, who is responsible for employing internal controls? Guys, the primary responsibility is of management of the company to employ internal controls. Management should make sure that internal control system is working fine, and all the numbers are tying up well, and all the financial information is flowed into the financial statements well. This is responsibility of the management. Management should also monitor these controls to ensure that they are working fine. So it's management's responsibility to ensure that the internal controls are working fine. Auditor's responsibility is secondary responsibility, which is to examine and evaluate the controls. So auditor should evaluate the controls whether they are working fine or not. Auditor has a secondary responsibility. The primary responsibility is of the management only. Management should make sure that the controls are working fine. This is the primary responsibility of management, and the secondary responsibility is of the auditor. Then techniques of evaluation of controls. So how would an auditor know whether the controls are working fine or not? Naturally, the auditor needs to inquire it from the employees of the company. Auditor will ask from the employees of the company. So first is the narrative records. Auditor can read this complete and exhaustive description of control system. The auditor should understand the control system completely. Who collects the cash? Who checks the cash after collection? Who deposits the cash into bank? Auditor should read through all these control systems and have an in-depth analysis. In-depth analysis of these controls should be checked by the auditor. Then checklist should be prepared by the auditor. Comprehensive checklist of internal controls should be prepared by the auditor, that yes, all the internal controls are working fine. The checklist should be there. Flowchart can be there to give understanding to the auditor about the internal control system. How do controls work? Flowchart can be there. Then internal control questionnaire. The auditor can ask various people of the organization about internal controls. Like, the auditor can ask that, can is there any chance that you will not follow this internal control if MD asks you not to follow it? Has it ever happened that MD asked you not to follow this internal control? Auditor can ask such questions from the employees, because guys, ultimately employees are under the MD. If employees are under the MD, then MD can change the internal controls as and when he wants. So ultimately, the employees are functioning under the MD. So it is very important to check whether MD is not doing something wrong with the internal controls. Then what are internal checks? Internal checks, I've already told you that internal checks are the checkpoints or the cross checking, double checking of every transaction. whether transaction is working fine, whether all the transactions are going out smooth. This checking is done by the internal auditor. System of checking, whereby work of an individual is automatically checked by another individual. So work of one individual is automatically checked by work of another individual. This is known as internal check. This is done by distributing the duties in such a way that no individual allowed to carry out each and every aspect of a transaction all by himself. So the splitting of duties happen. One transaction is undertaken by two people. One transaction is not undertaken by one people. One transaction is undertaken by two people. So splitting happens. In case splitting happens, then the internal check is automatically infused. This reduces possibility of errors and frauds. Now, auditor has also the duty to, on a test check basis, test whether these internal check systems are working fine or not. This is auditor's responsibility to apply test check on the transaction, to verify few classes of transaction in detail, to examine validity of internal checks. Whether internal checks are valid or not, the auditor should see it. Internal control questionnaire, again, the auditor should ask questions from the employees to ensure that internal control system is working fine. The employee should answer whether has been instances where internal checks were not followed. Has ever it had happened that you did not follow the internal check? And yes, you would think that, sir, why would the employee say the truth? No, employees say the truth because employee don't understand the importance of internal checks and internal control, etc. So, they will say the truth. They sometimes say the truth. So questionnaires are very, very effective. Auditor should submit the questionnaire to the concerned official of the organization anytime during course of the audit. Then what is the distinguishing factor between checklist and internal control questionnaire? So guys, checklist is an internal document which auditor prepares to ensure that all the audit procedures are done fine. Okay. So these are instructions which are to be followed by the audit staff. Checklist is a document which is to be followed by the audit staff to ensure that all the points, all the relevant instructions are being followed by the audit staff. Internal control questionnaire is related to internal controls which are filled by the auditee, the employees of the auditee. Okay, then checklist is prepared and issued at the commencement of the audit, prepared and issued during the course of the audit. So checklist is made at the beginning of the audit. Internal control question is made during the course of audit as and when required. Issued to audit staff, it is issued to management of the company. Management of the company responds to it. Serves as a guideline for audit staff to ensure that nothing remains unchecked. Everything is being checked. Okay, this is the checklist. Internal control questionnaire is for collecting the information regarding internal control system. The objective is very, very different. Then what do you mean by surprise checks? Guys, sometimes what happens is, sometimes the auditor can do a surprise visit at the auditee's place. Sometimes the auditor can suddenly go to the cash box and count the cash and compare whether cash box and cash book discloses the same cash or not. Sometimes the auditor may, at random go to the plant and see whether fixed assets are there or not. The fixed assets which are there in balance sheet or not. These are known as surprise checks. Okay. When auditor or his staff visits the client without any prior notice, that is known as surprise check. It is unplanned and spontaneous. It checks the effectiveness of internal controls. The surprise element improves the effectiveness of audit. Right? Cut-off procedures, very, very, very important topic. Very, very important topic. Please note that in the examination, fill in the blanks, 2 marks, 3 marks, 4 marks. Any kind of question can come from this particular concept. Cut-off procedures. Very, very, very important. Cut-off procedures. Now, let me explain you using a example. Okay. 31st March 2022. 31st March 2022. You bought fixed assets worth rupees 1 lakh. What was that fixed asset? They were ACs. They were air conditioners. I will ask a fastest finger first question. So your hand should be on your keyboards. You should be very, very quick. Please listen to the example very carefully. 31st March 2022, you bought a fixed asset which is AC. You gave the money to the vendor, but the vendor installed this AC on 1st April 2022. But you capitalized this AC on 31st March 2022 because you had the bill from the vendor. Vendor had given the bill and you had made the payment also. So you capitalize the AC on 31st March 2022. In your books of accounts, ACs worth rupees 1 lakh were shown on 31st March 2022. However, physically, the AC was there in your office on 1st April 2022. Please tell me, right or wrong? Please tell me, right or wrong in the comment box. Please tell me, right or wrong in the comment box. Let me repeat. You have purchased ACs on 31st March 2022. However, the ACs were not installed at your place on 31st March 2022. You had made the payment on 31st March 2022. The ACs were installed on 1st April 2022, but your books of accounts show an AC fixed asset of 31st of 1 lakh rupees on 31st March 2022. Right or wrong? Right or wrong? So Pacific says wrong, Amarjeet says right, Vivek says wrong, Kirti wrong, Deepti wrong, Vivek Sharma wrong, Chandan wrong, Kirti wrong, Bharat right, Monica right, Khushwant wrong. Khushwant wrong. Okay, okay. Very good, very good. There's a mixed response. Guys, this is absolutely wrong. This is absolutely wrong. Unless and until the fixed assets reach your factory and they're installed, they should not be visible in your balance sheet. They should not be visible as a fixed asset in your balance sheet. They should not be visible as a fixed asset in your balance sheet. Example number 2. You have purchased raw material on 31st March 2022, worth rupees 1 lakh. Same example. The raw material was received on 1st April 2022. But you have booked expenses on 31st March 2022. Right or wrong? Right or wrong? Right or wrong? Yes, Pacific was first to reply. Very good. Right or wrong? Raw material purchased on 31st March 2022, but received by you on 1st April 2022. You have booked these expenses on at the year end 31st March 2022. Right or wrong? Again, guys. Again, wrong. Again, wrong. Again, wrong. Raw material have not reached you on 31st March, so you cannot book the expenses on 31st March. So what if you have made advance payment? This is advance payment. So what? So guys, what do you mean by cutoff procedures? Cutoff procedure means you have to check the transactions which happen at the year end or at the year beginning. And you have to ensure that only those transactions which pertain to the year should be recorded in the books of accounts. These are known as cutoff procedures. You have to see the transactions which have happened at the year end, and you have to make sure that those goods have been received in office or in the plant premises if you want to book those expenses or book those things in the books of accounts. These are known as cutoff procedures. Ensures recording of transactions in the correct accounting period. The accounting period should be correct. So cutoff procedure ensures that your accounting period is correct, especially used in accounts receivable, accounts payable function, ensures proper accounting of assets and liabilities. I hope you understood this particular concept very well. Cutoff procedures. So you have to book your incomings and outgoings in the correct period. Period should be correct. Period should be correct. I'll give you another example. Suppose I have sold some goods, okay, and my customer has given me the money also. I have sold goods worth rupees 1 lakh. Customer has given me money also. I have sold goods on 31st March 2022. But the customer has picked up the goods on 1st April 2022. Should I book this sales on 31st March or should I book this sales on 1st April? Should I book this sales on 31st March or should I book this sales on 1st April? That is my question to all of you. My sales have happened on 31st March. Money has also received by me on 31st of March, but the product was collected by the customer on 1st of April. In the chat box, please tell me, should I book my sales on 31st March or 1st April? Mixed response. Again, mixed response. Bharat says 31st. JR says 31st. Vivek says 1st April. Avisha says April. Bhavisha 31st March. 1st April. Guys, the correct answer is 1st April, because the risks and rewards in the goods are transferred on 1st of April. Only when delivery happens, this will ensure that my revenue is proper. So on 1st of April, when risk and rewards regarding this particular good is transferred to the customer, only then will I record the sales. These are known as cutoff procedures, which ensure that you book your accounting transactions in the right accounting period. That is the concept of cutoff procedures. Okay, sir. Next is walkthrough. What is a walkthrough? Guys, walkthrough is nothing but deep diving into a particular transaction, in-depth analysis of a select few class of transactions. These transactions are usually critical transactions in which level of risk is high. So, to understand a particular transaction, we deep dive into that particular transaction and do a complete check of the entire transaction. That is known as a walkthrough. In this process, auditor traces the transaction from its source till it is presented in the financial books. So all the documents relating to a particular transaction are seen by the auditor. This is known as a walkthrough, which is a detailed procedure of auditing. It's a substantive procedure. Then we come on to internal audit. Now, very, very important, internal audit. We need to check before the statutory auditor comes in, before a third party auditor comes in, we need to check whether our financial statements look fine, whether our internal controls are working fine, whether our internal control systems are working fine. And this will be done by an insider known as internal audit. Internal auditor is an insider. The company's management only appoints the internal auditor. Statutory auditor is appointed by the shareholders. He is the third party. Internal auditor is not the third party. He is one of the management's person only. So appraisal of internal control system by a staff of entity or by independent professional is known as internal audit. Review of accounting, financial and other operation control. Everything is done by internal auditor. Analysis, appraisal activity reviewed by the to the management. Continuous effort to promote effective control. Effective control is the core of internal audit. Need for internal audit. It increases size and complexity of organization. So need of internal audit is more if the size is bigger or complexity is bigger. Then the need of internal audit is more. If numerous compliances are required, then internal audit is required. Unconventional business models. If you have business models which are very unconventional, which are not traditional business models, then internal audit is required. Intensive use of information technology. If you use information technology a lot in your business, then internal audit is required. Then information technology. Then increase competition. If you have a lot of competition, and if you have to induce efficiency in your business, which means that you think that there are certain suboptimal business, there are certain activities which are not optimally done, then you can induce internal auditors. Areas and function scope covered in audit. The auditors look at financial and operational information. So financial accounts definitely are seen by the auditors, internal auditors. They also see the operating information. Okay. For example, if you are hiring 20 employees and that work can be done by 15 employees, then internal auditor will say that, you please let go 5 employees. So internal audit looks at financial information as well as operational information. Then it also looks at compliances with law. Whatever law company is facing, internal audit will make sure that compliance with law is happening. Safeguarding of asset. Asset is safeguarded by the internal auditor. Optimum utilization of resources is done by the internal auditor. Then achieving the goals of the organization are also achieved by the internal auditor. Internal auditor makes sure that achievement of goals happens, which means if you aim at increasing your profits or you aim at reducing your expenses, all those aims are achieved. This is responsibility of the internal auditor. Now, guys, in case of the statutory auditor, okay, statutory auditor is not bothered about your goals. He's not bothered about optimum utilization of resources. He's not bothered about such things. He's only bothered about the law, which you are following or not following. He's bothered about the financial information. He's bothered about safeguarding of asset. Right? So there's a difference between internal auditor and statutory auditor. Internal auditor is your own person, company's person. Statutory auditor is an outsider. That is the difference. Advantages of internal auditor. Internal auditor is important to management. The internal control system is reviewed. That is the best part. If any deviation is there from the procedures which are employed, those deviations are highlighted by the internal auditor. So any deviation are there. If any deviation is there, that is highlighted by the internal auditor. Then organization structure, management information system is appraised. Appraised means checking is done. Policies, plans, strategies are well in place. They are being working fine. It suggests management on the management information system, controls, everything. Then what is the benefit to statutory auditor of internal audit? Guys, internal auditor gives an in-depth analysis of internal control system, and statutory auditor sometimes relies on internal control systems. So it can reduce the work of statutory auditor. If internal auditor has done his work properly, it can reduce the work of statutory auditor. Statutory auditor can rely on the stock valuation which is carried by internal auditor. Timely, accurate completion of accounts and accuracy of records are maintained. Then what are the benefits which are given to other stakeholders? Accounting system is accurate and efficient. This is a thing which other stakeholders get benefit out of internal audit. Review of business performance and management. Safeguard business assets. Business assets are safeguard. So this is a benefit which internal audit gives to other stakeholders. Prevents misuse and misappropriation of business assets. Auditor can suggest ways to improve performance of the business. Internal auditor can sometimes give you tips to how to improve performance of the business. Errors and frauds will be prevented. Enhance performance of the business and keep checks on proper utilization of resources. So all these things are done by the internal auditor. All right, next is vouching and verification. Guys, these are two steps which are done by auditors. Vouching means to check the supporting documents. Supporting documents means sales invoice, cash memo. It is the evidence, a written record of expenditure, disbursement of completed transaction. So all the documents, if you check the documents, then this is known as vouching. And voucher is a set of documents which will prove validity of a particular transaction. So for example, if you have purchased raw material, then the proof is invoice will be there. Then transporter's challan will be there. Transporter's delivery report will be there. Then at the gate, inward register will have a entry that yes, this raw material has been purchased. Then bank will have a outward movement of funds which will prove that raw material has been purchased. So voucher is an accumulation of all those evidences which taken together can prove a particular transaction. That is known as voucher. Then what is vouching? Vouching means examination by the auditor of all the evidences. So whatever evidences are there, if the auditor examines all those evidences, that is known as vouching. Like vouchers which are available to support the transactions. Vouching is said to be essence of auditing. So the basic core of auditing is vouching, or backbone of auditing is vouching. So vouching is the process of checking the documents. Okay, checking the documents is vouching. Teaming and lading error. This is a very a specific kind of an error. Teaming and lading error. This will happen when there's a misappropriation of cash by concealing the cash shortages, covering them through recoveries from other customers. It's very, very important, guys. Okay, so customer A, we have customers, customer A, B, C, D. Customer A pays 10,000 rupees to one of our employees. Employee, instead of depositing that money in bank, it keeps the cash to its pocket. Okay. Then when customer B pays to the company, the employee says that this payment has been done by customer A. So customer A accounts is set off. Then when customer C pays to the company, then the employee says that, okay, this is being paid by customer B. This is how the initial customer A's payment has been kept in pocket of the employee, and the subsequent payments which are received, they are being set off in the accounts to some other customers. And one day, the employee will leave the company. It will resign from the company. And after that employee resigns, this entire scheme of fraud will be unearthed. This is known as teaming and lading error. A method of misappropriation of cash by concealing the cash shortages and covering them through recoveries from another customer. These are known as teaming and lading errors. This is very, very important, guys. Verification. Next is verification. Verification means, vouching means looking at the documents. Verification means actually physically going to the place where the fixed asset or the transaction has happened and seeing it in front of you. For example, verification happens of fixed assets. Okay, so one thing is to see that fixed assets have adequate vouchers, adequate invoices, and all the necessary documents are there in case of fixed asset. One thing is looking at that. Second thing is seeing that the fixed asset actually exists. So when you see the fixed asset in front of you, that is known as verification. I want to go and see the fixed asset physically. So vouching is concerned with examination of underlying documents of a transaction. However, verification goes beyond vouching and is inquiry into the value, ownership, title, existence, possession, and presence of any charge on the asset. So the verification will contain a much more in-depth analysis. It will contain physical seeing or looking at the assets as well. Objectives of verification, it checks the existence of asset. So whether the asset is on the paper or is it actually exists or not, or is it only on the paper? Existence is checked. Then title of asset is in whose name, who's the owner of the asset, that is also checked. Valuation of asset is correct or not. The assets are recorded properly or not. They are being recorded along with the installation expenses. Find out whether any to trace error and fraud, any inadequate internal control is there. All these things are checked. Techniques of verification. How do you verify? You inspect. You go physically and inspect. Okay, this is the first way of verification. You observe. Observe means you may witness the if you know assets counting is being done, then you go over there and you witness that yes, assets are being counted by the employees. So observation is there. Then confirmation. These are third party outside confirmation. So sometimes your fixed assets are kept at some third party premises. So you take a confirmation from the third party that yes, that asset which is belonging to the company is kept at your premises. That is third party confirmations. So types of these are the various ways in which verification can happen. Then we have sample checklist for audit of some critical account heads. What are the steps? What is checklist? Checklists are the steps which are to be taken for auditing certain critical account heads. What are the steps that are to be taken? For example, cash sales. If you're doing cash sales, then who's authorizing the cash sales that you need to check? Then you need to check the bills, accurate rate and amount is being recovered. Then you need to check the cash sales summary book. Then you need to check the system which is employed to deposit the cash in bank account. So all these things are required to be checked when you're checking the cash sales. So guys, this particular section will contain steps of auditing certain important heads of the accounts. Okay, I'm not going into depth of these steps because these steps are very normal and you can read it in your book. All right, sir. So this was the end of chapter number 3. Let's start chapter number 4 and one of the very important chapters of our syllabus, guys, which is companies audit. Okay, this chapter is companies audit. And yes, this is one of the very important chapters of your syllabus. And this particular chapter will contain a weightage of, say, at least 10 marks, 10 to 12 marks in the examination. Okay, sir, got it. So let's start chapter number 4. Before starting chapter number 4, any questions in chapter number 3? Any questions in chapter number 3? Yes or no? Please write in the chat box. Any questions in chapter number 3? Otherwise, I'll start chapter number 4. Should I start chapter number 4? Yes, I'm starting chapter number 4 then. Oh, all right. So guys, 3 chapters down, 4 chapters to go. Yes, we are rocking. Wow, we have already spent 3 hours together, and I don't feel lack of energy, because the energy that you are transmitting in me through the chats, the energy that you are transmitting into me through the chats is par excellence. So I'm not feeling fainted. I'm not feeling lack of energy at all. I don't want glucon D. I don't want to have my breakfast or my lunch. I want to continue this marathon. I want to finish this marathon. I don't want any energy. How's the Josh? Let's write in the chat box. How's the Josh? Please write in the chat box. How's the Josh? Is Josh still there, or are you tired? Are you tired, or the Josh is still there? Please write in the chat box. How's the Josh? If you're tired, then tell me. I will break this marathon and I will continue it some other day. Hi, sir. Vivek, Afia, Kadak, Deepti Singh, Kadak, sir. Vijay Lakshmi, hi. Amarjeet, hi. Everyone's saying hi. Good, yeah. After 3 hours of studying audit a theoretical subject, you are how motivated and how high can you be? How kadak can you be? I am not able to understand. Radha Krishnan says hi. Not tired. Amarjeet Singh, not tired. Very good, yeah. So what if this marathon continues for 8 hours or 10 hours? Will you still not be tired? Hi, sir. Not at all tired. Bharat Surya Singh, not at all tired. Very good, Bharat. Maja avi gayi. Some Gujarati bhai chu. Kanav, Gujarati bhai. Maja avi gayi. Kushwant is saying it's awesome, sir. Kanav is saying no, it's not tiring at all. All right, if it's not tiring, then let's continue chapter number 4, a very very important chapter. Sir, बस पास होने की राह में हाई होना पड़ता है. Absolutely, guys. पास होना है तो हाई तो होना पड़ेगा. Absolutely, very good. So let's continue chapter number 4 now. Chapter number 4 is Audit under Companies Act, a very 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 important chapter, guys. Please write very very important. Okay, so what are the provisions which are related to auditors in Companies Act? That is what we are going to study now. The first provision is appointment of auditors. Appointment of auditors, section 139 deals with appointment of auditors. What are the timelines which are required to be followed while appointing the auditors? What are the methods to be followed while appointing the auditors? Now, appointment of auditors can be split into 2 parts: appointment of first-time auditors and appointment of subsequent auditors. Okay, first-time auditors are appointed in a different way. First time means when the company is freshly incorporated. then you employ the auditor for the first time, right? Now that is first time auditor. Subsequent auditor means afterwards, second year, third year, fourth year, that is subsequent auditor. Okay, so both the methods are different. So first of all, we are going to deal with first auditor in case of a government company. So guys, there's a distinguishing factor between government company audit appointment and private company audit appointment. Government company auditors are appointed by CAG, Comptroller and Auditor General of India. So first time auditor, first auditor of a government company appointed by CAG within 60 days from the date of registration of the company. So the time limit is within 60 days of the registration of the company. If CAG does not appoint within 60 days, then within next 30 days, board of directors of the company must appoint. And if the board doesn't appoint within next 30 days, then the members should appoint the auditor within next 60 days. So first 60 days are given to CAG. If CAG doesn't appoint within first 60 days, the next 30 days are given to board of directors. Board of directors should appoint. If board of directors do not appoint in next 30 days, then the members or the shareholders should appoint within next 60 days. That is the hierarchy which is to be followed in case of first time auditor. Okay, first time auditor of a government company. Now, first auditor of a company other than government company, which means a private company or public company, appointment of board of directors within 30 days. Board of directors should appoint within 30 days of registration of the company. If the board fails, then members should fill within 90 days. If board of directors do not fill within 30 days, then board of directors should, then members, shareholders should fill the vacancy within 90 days. What about subsequent auditors? So after first year, second year, third year, what about them? Government company, the CAG should appoint within 180 days from commencement of the financial year. So good 6 months are given to CAG. CAG will appoint the subsequent auditor within 180 days from commencement of the financial year. Subsequent auditor in case of other than government company, every company appoints an auditor first AGM till the conclusion of 6th AGM. So guys, 5 years lock-in is there in Companies Act. So first time the subsequent auditor should be appointed in the first AGM till the conclusion of 6th AGM. Auditor may be individual or a partnership firm. No listed company can reappoint the individual auditor for more than 5 consecutive years. So rotation of auditors is mandatory. After every 5 years, the auditor should change. After every 5 years, the auditor should change. Auditor who has completed the prescribed term of 5 years or 10 consecutive years. Guys, 5 years in case where there is only one partner. 10 consecutive years where there are more than one partners. There the rotation period is, the lock-in period is 10 years. Okay, should not be reappointed as an auditor for next 5 consecutive years. So for next 5 consecutive years, the auditor cannot be reappointed. This is the cooling off period. In case of casual vacancy, what do you mean by casual vacancy? Casual vacancy means during the tenure of the auditorship, the auditor dies or it resigns, or some natural calamity happen because of which auditor is unable to continue. This is casual vacancy. In case of casual vacancy, it is to be filled by 30 days. In case of government company by CAG, it is to be filled within 30 days. In case of any other company, by the board of directors. So 30 days is the time limit which is given for filling the casual vacancies. 30 days given to CAG, 30 days given to board of directors to file this vacancy, to fill this vacancy. Removal or resignation of auditor. Guys, if auditor, you want to remove the auditor, or auditor resigns during its tenure, then what are the principles? Auditor may be removed before the end of his term by passing a special resolution. You have to pass a special resolution, because guys, there has to be some concrete reason why you are removing this auditor. Auditor cannot be removed. You don't like the face of the auditor. Auditor cannot be removed on this basis that you don't like the face of the auditor. There has to be some concrete reason. So you have to pass a special resolution. And previous approval of central government is required to remove the auditor. What if the auditor resigns? Then when the auditor resigns from the company, he should within 30 days from resignation file a statement with the company and the registrar. So auditor should, after resigning, file a statement with the registrar stating the reasons of resignation. Because guys, removal and resignation are very, very rare things. Okay, if an auditor is removing or he's resigning, then guys, there is a very big problem. So the removal and resignation should be very much controlled. Eligibility or qualification of auditor. Who can be an auditor? An auditor can be a chartered accountant or a firm of chartered accountants. Okay, and this we are talking about financial audit. Guys, in case of cost audit, CMAs can also be the auditor. In case of cost audit, CMAs are the cost auditors. CMAs can be the cost auditors. In case of firm, only partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. So only a partnership firm which contains all the chartered accountants can be the working partners of the firm. Disqualifications of the auditor. Who should not be the auditor? So body corporate should not be the auditor, which means any company or the like, any company or the like cannot be the auditor of a particular organization. Officer or employee of the company or partner or employee of such officer of the or the employee should not be the auditor. Who holds security or interest in the company. Now guys, please understand that we had studied that auditor should be independent. Okay, auditor should be independent. Independent means free from bias, free from influence. And if anything of this happens, then he is not free from influence. There is some influence which the auditor has. So for example, if auditor holds securities and or interest, then auditor is influenced. If auditor is indebted to the company above 5 lakh rupees, auditor is influenced. Who has given guarantee or security which is connected with indebtedness? Guarantor. Who has business relationship with the company? Suppose the auditor supplies raw material to the company, then auditor is influenced. He is partial. Who has been convicted by the court for any fraud and 10 years have not elapsed. So after the conviction of the court for any fraud, 10 years have not elapsed. Who is engaged in consulting and specialized services under section 144. So a person, an auditor who is engaged in consulting or specialized services like bookkeeping, actuarial services, he cannot be an auditor of the company because these services are restricted services. Then who will decide the remuneration of the auditor? It should be fixed in general meeting. Guys, principle is very same. Who appoints the auditor should fix the remuneration. In case of statutory auditor, appointment is done by shareholders. So who should fix the remuneration? Shareholders should fix the remuneration. In case of internal auditor, who appoints the internal auditor? Board of directors. Then who should decide the remuneration of internal auditors? Board of directors. In case of statutory auditor, the remuneration should be fixed in general meeting. Should be fixed by board for the first auditor. For the first auditor, board should fix it because board has appointed. For the subsequent auditor, the shareholders should fix it. Powers and rights of the auditor. So what are the powers and rights of the auditor? Right to access books of accounts and supporting documents of the company as well as its subsidiary. So first right is that it can acquire books of accounts. It can take books of accounts of the company and its subsidiaries. So the auditor has the power to access the books of accounts. So the first power is right to access the books of accounts. That is the first power which is there with the auditor. Second is ask such information and explanation regarding the books of accounts. So whatever are the books of accounts, the information and explanation regarding those books of accounts are to be taken up by the auditors. So auditor has the right to ask for information and explanation. Then auditor can inquire into the critical matters like whether loans and advances made by the company are fully secured and they are not prejudicial to the interest of the company. So auditor can inquire into any of the things, right? Like which assets are sold. Please show me the vouchers, invoices. Like why have you given loan to certain person? Will he be able to repay? All the inquiries can be done by the auditor. Auditor has all the right to give qualification on the matters he deems fit. Now, what do you mean by qualification? Qualification means a negative comment. Qualification means a negative comment. So auditor can qualify the audit report. He can say that this is a incorrect transaction. So the auditor can qualify the report. In case of government companies, CAG has power to conduct test audit, supplementary audit in addition to regular statutory audit. So these are special powers which are given to CAG. In case of government companies, it can take supplementary audit as a part, or some test audit can be done. To attend AGM and address the members. So auditor has power to attend the AGM and address the members and tell some critical points to the shareholders. If there are certain irregularities, then he can highlight to the shareholders. These are the powers of auditor. Now, what are the duties of the auditor? What are the duties of the auditor? What should auditor do? To actually do to its best capability to make report to the members. First duty is to prepare the audit report on the basis of accounts examined. First duty is to make the audit report, to express an opinion. To express an opinion, that is the first duty. In case of government audit, to furnish report to the CAG. So auditor's responsibility is to furnish report to the CAG in case of government audit. Sometimes, auditors are appointed by CAG. Supplementary auditors are appointed by CAG. So they should give a report to the CAG. To comply with the auditing standards, he should comply with the auditing standards. Then he should give true and fair view of the company's affairs. To give reason for every qualification. So qualification means a negative comment. The auditor should also give the reason for this negative comment. Why have you given this negative comment? What observations have you made to make this negative comment? to inform the board of directors or the audit committee and subsequently to central government in case of a fraud within prescribed time limits. So to inform the board of directors, audit committee about whatever fraud has happened. If any fraud has happened, then auditor's responsibility is to inform to the board of director, audit committee, even to central government if need be. Disclose impact of pending litigation. Ensure that company has provision for foreseeable losses. To ensure that company has duly deposited the statutory dues. So all the compliances are made by the company. This is to be ensured by the auditor. These are the duties of the auditor. Punishment or contravention. So if auditor does not fulfill the following duties, then what are the punishment and contravention? If company do not follow any duty, then what are the pensions? What are the contraventions? What are the penalties for the company? Now for the company, fine of 25,000 rupees to 5 lakh rupees. That is the fine which the company is to be given. For the auditor, 25,000 rupees to 5 lakh rupees. For unknowing defaults, for knowing defaults, for ignoring certain facts, 1 lakh rupees to 25 lakh rupees, imprisonment of 0 to 1 years. Where auditor is convicted, he or she shall be required to refund the remuneration which is paid, which is received by him to the company, and pay damages if any. So if the auditor is found convicted of any wrongdoing, then he has to refund the money which is received from the company, along with paying these penalties. These penalties are of course there. Along with paying this penalty, he has to refund the remuneration to the company. Audit committee, now very, very important, guys, provision. Very, very important provision. Now, in certain cases, there has to be a separate audit committee which is to be created by the company. The role of the audit committee is just to monitor audit, just to see whether audit is conducted in proper manner or not. And whatever are the qualifications of the auditor, they are to be replied to, or they are to be fully rectified. That is the objective with which the audit committee is formed in certain organizations. So audit committee is a special committee which is required to be made by certain companies to ensure that audit is conducted in a proper manner, audit is being conducted in a fruitful manner, and all the qualifications which are there in audit, they are addressed properly. Constitution of audit committee is mandatory for, so who all are required to prepare audit committee, who constitute audit committee in their company? Every listed company. So if you are a listed company, then audit committee is mandatory. All public companies having paid up share capital of 10 crores or more, or turnover of 100 crores or more, or outstanding loans or deposits of 50 crore or more. If you satisfy any of these three conditions, then you are required to comprise your audit committee or make your audit committee. Then an audit committee shall have minimum of 3 directors. Majority of them should be independent directors. So minimum 3 directors are required in an audit committee, and a majority of them should be independent. Functions of audit committee: appointment and fixation of remuneration of auditor. That is the first function of audit committee. Examination of financial statements. Financial statements should be examined. Then loans, investment should be examined. Valuation of assets should be done. Evaluation of internal financial control, management system of entity should be evaluated. Evaluation of use of funds which are rose through public offers, which means if the company has listed itself in stock exchange, then whatever money has come, whether that has been utilized properly or not. Evaluation of related party transaction. So all these things are to be seen by the audit committee. Powers of audit committee: to call for comments of the auditor about internal control system. Or audit committee can directly talk to the auditor and ask them, what are the lacunas that you have found in our books of accounts? Please tell us, so that we can reprimand the finance director. So finance department is different, audit committee is different. They are two different departments. Audit committee can actually reprimand or scold the finance director or the finance department if auditor reports anything which is beyond the normal scenario. Okay, so audit committee has the power to call for comments of the auditors, or to review the financial statements, audit report before submission to the auditor, or to discuss any issue with the statutory or internal auditor. So these are the powers of the audit committee. And yes, by this we have completed our chapter number 4. Chapter number 4, guys, one of the most important chapters of your syllabus. Yes, we have completed. Wow, sense of achievement has struck us. Sense of achievement. Wow, amazing, amazing. How do you feel? How do you feel? Mohan Parcha says no pain no gain. Brilliant, brilliant. Sir, paper है इसलिए tired नहीं हुए. Sanjay, Sanju. Okay, great. So guys, chapter number 4 is over now. And now I will move on to chapter number 5. A very small chapter number 5 and 6, both taken together, small chapters, but from an exam standpoint, very, very important chapters, guys. Small chapters, but from an exam standpoint, very, very important chapters, guys. Very, very important chapters. And you will love chapter number 5. Chapter number 5 is my favorite chapter. You will love chapter number 5. Okay. Are you feeling good? How many of you are feeling hungry? How many of you are feeling hungry? So if I give you pav bhaji, or if I give you vada pav, for especially for Maharashtrians, how will you like to eat it? Sir, it's like Airbus. Feels so good of revision. Very nice. Very nice. How many of you are hungry? How many of you are feeling hungry? How many of you want pav bhaji? Or some South Indian dish? I love South Indian. So how many of you want dosa? Or appam with side dish? Sanju says biryani, chicken biryani. Okay. How many of you are feeling hungry? So yes, we are feeling hungry, but till the time this marathon is on, so we are not going to eat anything. No, we'll finish this marathon first. Yes, we might eat something like a biscuit or something like that, but we will not have our lunch unless and until we are going to finish this marathon lecture. We are not going to take our lunch also. Perfect. Very good resolution, guys. Very, very good resolution. We are not going to take our lunch unless until we finish our marathon lecture. Upavas. Kirti Singh, as you have taken names of these dishes, my mouth is watering now. Absolutely, guys. Okay. Someone is keeping upavas also. Who's keeping upavas? Bharat Surya has upavas. अरे भरत किस चीज का उपवास है जरा बताना. आज कौन सी तिथि है? खमन ढोकला Yamuna Chokana. Khaman Dokla, and I also love Khaman Dokla, guys. I simply love Khaman Dokla. Seriously, it's my favorite. I'm now in graduation second year. All right, keep going. So, what is provision relating to branch office of a company? Priyanshi, I will discuss it. In chapter number 6 and 7, I will discuss this branch of a company. I will discuss this. Very, very important. Very, very important topic from your exam standpoint. आपके लेक्चर हो जाने तक उपवास. वाह, ये हुई ना बात. जबरदस्त. भरत कह रहे हैं जब तक आपका लेक्चर खत्म नहीं होता तब तक हम उपवास रखेंगे. बिल्कुल, मैं भी जब तक मेरा लेक्चर खत्म नहीं हो जाता मैं भी उपवास रखूंगा. तुम्हारे साथ हम ये उपवास रखेंगे, चाहे 4 घंटे का हो, चाहे 5 घंटे का हो, चाहे 6 घंटे का हो, हमें फर्क नहीं पड़ता. हम आज ऑडिट खत्म करके जाएंगे, पूरा रिवाइज करके जाएंगे और ढंग से अपने दिमाग में बिठा के जाएंगे, ताकि एग्जाम से एक दिन पहले अगर हमने 1 घंटा भी दिया ऑडिट को तो हम पूरा एग्जाम ढंग से क्लियर कर लें. ये है हमारा टारगेट. सर रेड पुल पी नहीं बनी, मैं कोई रेड पुल पी के नहीं आया. Okay, great, guys. Now let's start chapter number 5. Very, very important chapter of your syllabus, guys. And yes, this chapter holds say 4 to 5 marks in your examination. It's an important chapter. And guys, the best part is this chapter deals with cost audit, which is monopoly of CMAs. Monopoly of CMAs. CMAs have got exclusive authority to do cost audit. And guys, in your final 100 marks paper is dedicated to this particular chapter. So the concept which you are studying in one chapter, this concept is there in 100 marks paper. A full-fledged paper is there in your CMA final, which is related to cost audit. So a very, very important chapter from not only from your intermediate standpoint, but from your final standpoint also. A very, very important chapter, cost audit and secretarial audit. And best part is that is monopoly. It is monopoly of the cost accountants. It is monopoly of the cost accountant CMAs to conduct cost audit. Cost audit is very different from financial audit. Financial audit is conducted by chartered accountants, where the focus is on financial information. Cost audit is done by cost accountants, and the focus is on cost sheet, cost information. That is the focus of cost audit. Let's read the provisions of cost audit. So cost audit, section 148. Companies engaged in production of prescribed goods or services must maintain the following cost records. So the companies which are into business of manufacturing or providing services, they're into manufacturing of some specific goods, or they are into providing of certain services, are required to maintain their cost records in CRA1, which contains utilization of labor, utilization of material, and other item of cost. This is nothing but your cost sheet. So you have to prepare your cost sheet along with the accompanying annexures. The companies which are required to maintain cost records and whose net worth is above the prescribed limit are required to get their cost audit done. So cost audit is also required to be done by certain companies who are first of all getting their cost records prepared, and their threshold turnover is also exceeding certain limit. So there are two things. Number one, preparation of cost records, which has a different turnover limit. Number two, getting cost audit done. So it is not necessary that all the companies who are preparing their cost records are mandatorily required to get their cost audit done. It is not necessary. So some companies are maintaining their cost records, but they are not doing their cost audit. This can also happen. Now, first of all, we'll see the provisions regarding cost records. We'll see the provisions regarding cost records. Okay, who all companies are required to prepare their cost records? Companies whose annual turnover is 35 crore or more are required to prepare their cost records. Guys, we are not talking about cost audit as of now. Companies who have annual turnover of 35 crores, they are required to prepare their cost records if they are falling under that prescribed category of goods. Only if their goods is falling under the prescribed category, then they are required to prepare their cost records. So 35 crores is the limit. If the annual turnover is above 35 crores, then cost records are required to be prepared. There are certain exemptions. Exemptions are foreign companies having only license office in India. So if a foreign company is having only license office in India and it has INR 35 crore or more turnover, it is not required to prepare its cost record. Or where micro, small and medium enterprises are there, and micro and small enterprises are exempt from preparation of cost records. Then appointment of cost auditor. Before appointment of cost auditor, okay, so the limits which are there for cost audit, they are not there in your syllabus. So we are directly moving on to appointment of cost auditor. Let me tell you for your knowledge. Okay, now these are the companies which are required to prepare their cost records. Suppose there are 1,000 companies which are required to prepare their cost records. Guys, out of this 1,000 companies, only 100 companies will be required to get their cost audit done. Okay, how will you determine how many of them, which one of them should be required to get their cost audit? Guys, there's another turnover criteria. If those turnover criteria are met, then the cost audit is also required to be done. In our syllabus, we have only the cost records turnover. We don't have the cost audit turnover criteria. Okay. Appointment of cost auditor, how the cost auditor should be appointed. Very, very important point. Cost auditor is appointed by the board of directors. In case of statutory audit, the the auditor is to be appointed by the shareholders. In case of cost audit, the auditor should be appointed by the board of directors. Cost auditor should give a consent letter to the board confirming that he or she is eligible for appointment. Consent letter is required from the cost auditor. Company issues appointment letter to the cost auditor. In form CRA2, guys, it is very, very important to learn the name of this form CRA2. So company gives the confirmation in form CRA2 for the appointment of the auditor. Cost auditor is appointed within earlier of the following periods: 180 days from the end of the commencement of the financial year, or 30 days of the board meeting. Okay, so the auditor is to be appointed within 180 days from the commencement of the financial year. So cost auditor should be appointed within 180 days from the commencement of the financial year, or 30 days of board meeting, whichever is earlier. So 30 days of the board meeting. The year commences on 1st April 2022, and board meeting happens on 15th April 2022. So the cost auditor should be appointed within 180 days of this period or within 30 days of this period. Naturally, in this case, 30 days of this period will be the nearer date, 14th May 2022. So by 14th May 2022, the cost auditor should be appointed. So cost auditor should be appointed within 180 days of commencement of the financial year or 30 days of the board meeting, whichever is earlier. Any casual vacancy should be filled within 30 days of its occurrence by the board of directors. Same provision as statutory auditor. Okay. Cost auditor should prepare cost audit report in form CRA3 within 180 days from the end of the financial year. So cost audit report should be prepared and submitted within 180 days from the end of the financial year. When financial year ends, till 180 days, the cost audit report is required to be furnished to the central government or the board of director. Then board of directors will inform CRA4. They will see the audit report. They will fill the audit report and all the qualifications which are there. They will provide comments on that qualification, and the company should file the cost audit report to the central government in CRA4 along with their comments. Okay. Qualification of cost auditor: he should be a cost accountant, which means a CMA, a qualified CMA, of course, holding a certificate of practice. Certificate of practice is mandatory. Disqualification of auditor: same as financial auditor. Okay. Please refer to chapter number 4. Same as financial auditor, the disqualifications are there. Over there, we had read that, he should not be indebted to the company. He should not hold securities of the company. He should not be a shareholder of the company. All these things are required to be seen. Some bots have cropped up, so I'm just removing those bots. Okay, the bots are removed. All right, so disqualification as studied in chapter number 4, it will be the same. Applicability of rotation of cost auditor, whether cost auditor is required to be rotated, just like the rotation which is there in financial auditor, which is 5 years, right? We had studied 5 years rotation period, 5 years cooling off period. No, the provisions are not applicable on cost auditors. Rotation provisions are not applicable on cost auditor, but still the company as a healthy practice may adopt it, but mandatory, not required. Rotation is not required. Authority for fixing remuneration, of course, who has appointed, he is required to fix the remuneration, which is board of directors. Board of directors will fix the remuneration of cost auditor. Such remuneration should be subsequently ratified by the shareholder. Shareholder should also give their consent. Obligation to report fraud. Cost auditor should report fraud to the board or audit committee promptly. In case amount involved is above the threshold, which is 1 crore rupees, then it should be reported to central government also. So yes, fraud should be reported by the cost auditor. Secretarial audit. Now this is very, very important audit, guys. This audit is to be done by company secretaries. This refers to the secretarial books of accounts, of not of accounts, but secretarial books like shareholders register, members register, loan register, directors register, meetings register. So all these are secretarial records. So the company secretary would audit the secretarial records and ensure that the secretarial records are prepared fine and they are working fine. This is to be ensured by secretarial audit, which is to be done by a company secretary. Every company is required to prepare secretarial books. These books are to be audited by practicing company secretary in form MR3. Applicability of secretarial audit. Every listed company is required to conduct a secretarial audit, and every public company. So listed company, whether it's having any threshold or not, no threshold is there. Every listed company is required to do its secretarial audit. In case of a public company, it should have a share capital of 50 crores or more, or a turnover of 250 crores or more. Then secretarial audit is applicable on that particular company. Appointment of secretarial auditor. Who will appoint the secretarial auditor? Appointment is to be done by board of directors in the board meeting. Company issues letter of appointment to the auditor, which is accepted by the auditor. Any change in secretarial auditor should be intimated by the members to the members in the board report. So board is responsible to appoint the secretarial auditor, and of course the remuneration will also be fixed by the board itself. So yes, guys, I told you a very small chapter. Chapter number 5 comes to an end, and it's a really important chapter from an exam standpoint, because a small chapter, but some important questions can come from this chapter in the examination. So an important chapter. And again, I'm repeating, those of you who wants these notes, KPTR notes, they are saved in the Google Drive, which is there in the description box. Please see the description box. There's a Google Drive, and in that Google Drive, these notes are saved. PDF are saved. You can download the PDF. They are not encrypted. They are not having any password. You can download the PDF and you can use the PDF for your revision purposes. They are very small, okay? They are very, very brief. So use it only for revision purposes. All right, next chapter is reporting requirements under Company Act, okay? Chapter number 6 is what we are going to start now. Rule of applicability of cost audit. So the rule of applicability of cost audit is that, there are two tables, table A product, table B product. Table A are regulated products, table B are non-regulated products, okay? So the turnover criteria is defined based on the relative products. If you fall under table A products, then there's a different set of regulation which is applicable on you, 50 crores and 25 crores. And if you have a table B product category, then the regulation will be 35 crores and 100 crores. If you cross this turnover limit, then you will be applicable for cost audit. That is the rule which is there for cost audit. But don't worry, you don't have this in your syllabus. All right, let's start chapter number 6, which is reporting requirements under Companies Act. How can we report? So what are the procedures for audit report? How can we report under the Companies Act? That is what we are going to start now. All right, so let's start chapter number 6, reporting requirements under the Companies Act. What are the reporting requirements? That is what we are going to see now. Now, what is an audit report? Audit report is a statement of observations where auditor expresses his opinion. Audit report is a statement of observation where the audit report expresses his opinion on the financial statements or the cost statements or anything else. That is known as the audit report. Importance of audit report: it is concluding part of the audit. Audit ends at the audit report. It gives opinion of the auditor. It reflects the work done by the auditor. Whatever work is done by the auditor, it is reflected in the audit report. A good audit report means auditor has worked well. A bad audit report means auditor has not worked well. It records auditor's responsibility. Auditor's responsibility is recorded in the audit report. Indicates real position of financial statements of the company. Elements of audit report are title. There has to be a title, which usually is auditor's report. Then addressee. Whom are you addressing? Like, statutory audit is addressed towards shareholders. So the addressee is shareholders in case of statutory audit. In case of cost audit, the addressee is board of directors. So depending upon who is the addressee, you write the addressee's name. Opening paragraph will generally contain the entity name, the period for which audit is done, responsibility of the auditor. Scope of audit. What are the relevant laws which are to be followed, standards which are to be followed while conducting the audit? That is the scope of audit. Opinion paragraph. What will be the opinion which is given, whether the financial statements are giving true and fair view or not? That is the opinion paragraph. Date of report is very, very important. Signature of auditor should be there. Place of auditor should be there. Place and signature. Then date of auditor should be there. Membership number should be there. All these things should be there. Now, there are different types of audit report. What are the different types of audit report? Clean report, emphasis of matter, qualified report, adverse report, disclaimer of opinion, piecemeal opinion. These are the types of audit report. Okay. First is the audit report, which is absolutely clean, unqualified. There is no problem in the financial statements. When the financial statements give a true and fair view, this is known as a clean and an unqualified report. Emphasis of matter is when the view is true and fair. The view is true and fair, but some special event has happened during the year, so the matter is to be emphasized in the board. So the view is true and fair, but some matters have been highlighted. That is known as emphasis of matter. Then what is a qualified report? Qualified report means although true and fair view is there, but there are small problems in the financial statements which are highlighted. There are some issues relating to current financial year which have been highlighted. So although the true and fair view is there, the problems are not that big that true and fair view is not given. Problems are not that big. They are not that pervasive that true and fair view is not given. That is known as a qualified report. Adverse report is when the problems are so large that the auditor is not giving a true and fair view. Auditor is saying that the financial statements are false and they are not fair. The problems are so large. So adverse report is when problems are very large and true and fair view is not there. Disclaimer of opinion is when no opinion is expressed by the auditor in absence of financial information. Information has not been given to the auditor. Therefore, auditor is unable to express an opinion. Piecemeal opinion is when no opinion is expressed by the auditor on some items of financial statement. Some items the opinion is expressed, some items the opinion is not expressed. That is piecemeal opinion. Then date of auditor's report, whenever the auditor signs the report, that is the date of auditor's report. Date of auditor report should be date of completion of audit. Whenever the audit is completed, that day the audit report should be signed. Events occurring after the date of auditor's report is not responsibility of the auditor. So after signing of the audit report, if anything happens, if any new event happens, that is not responsibility of the auditor. Date of auditor's report should be equal to or later than the date of signing of the financial statements by the company secretaries. So company signatories should sign the report first, because the financial statements are to be signed by the company directors also. So company director should first sign the financial statements and then audit report is signed by the auditor. Date of auditor report, date of auditor's signature should be later than the company's management's report. Then comes CARO. Guys, CARO, yes, CARO 2020 is applicable in our syllabus. CARO 2020 is applicable, and there are certain specific matters in the auditor's report which are highlighted in CARO. And guys, the good part is that the portion of CARO which is there in our syllabus, there are not much differences in 16 versus 20. So you need not take tension of this particular change, because the changes are not much. They are very minuscule, which I've done in my book, but they are very minuscule. You can almost ignore them. But yes, the CARO 2020 is applicable on in our syllabus of CMA. All right. So the certain things which CARO brings into foreplays, the applicability of CARO. is not applicable. Caro is not applicable on banking companies, insurance. First of all, what is Caro? Guys, Caro is that, on certain specific aspects, Government of India wants you to mandatorily give an opinion, whether this aspect is correct or not. So, for example, if the company is repaying loan on time, whether it is repaying loan on time or not, please specifically comment on it. Whether when it is a Nidhi company, whether it is conducting its business properly or not, please specifically comment on it. So Caro has given specific requirements to the auditors to comment on certain specific things. That is known as Caro. So Caro is not applicable to banking company, insurance company, a company with charitable purpose, one person company, small company, and private company having a very small quantum of work. Caro is not applicable to such companies. Revision of accounts before adoption in AGM. Now, this is very, very important, guys. When audit is completed, but before the accounts are adopted in the AGM, if some changes occur in the accounts, if some entries which were forgotten by the management that are being put in the accounts, then what will happen? In case there's a revision in accounts, after the audit has been completed, but before the audited financials have been circulated to the shareholders, the auditors may re-audit the revised financials subject to the following conditions. Auditors have to re-audit the financial statements, but certain conditions are required to be fulfilled. Recover the signed copies of the original accounts and auditor's report. Auditor's report is already signed. So the first requirement is that the auditor's report and original account should be recovered. Ensure adequate disclosure in regard to amendment in the revised financial statement. So in the revised financial statement, there should be a disclosure that yes, the accounts were already signed earlier, but now because of these amendments, accounts are re-signed. This disclosure should be there in the financials. Issue fresh report on revised financial statement in which the auditor should refer to earlier financial report. So a fresh report should be submitted. Partner who signed original report should also sign the revised report. Partner change should not be there. Partner change should not be there. Okay. Audit of abridged financial statement. Now, guys, what do you mean by abridged financial statement? Abridged financial statement means shorter version of financial statements. So sometimes for listed companies, there's a requirement that do not disclose your full financial statements, but give a summary of our financial statements, what all has happened during the year. That is known as abridged financial statements. So when you audit abridged financial statements are shortened version of detailed financial statements. These are prepared in addition to the detailed accounts for ease of understandability and reference of the shareholders. If they are prepared after date of signing of annual accounts, the event occurring after the balance sheet date must be taken into account. So abridged financial statements, if they are prepared after signing of annual accounts, then the event occurring after the date of sign of annual accounts and abridged accounts is not the auditor's responsibility. Auditor will not be held responsible. So, if final accounts are signed, say by 15th of April and abridged accounts are signed by 15th of May, then the events which are happening between these two dates, auditor will not take into consideration in the abridged financial statements, because abridged financial statements are a shorter version of the full financial statements only. They are not different. So you cannot say that in the abridged financial statement, I'm undertaking some additional transactions. You cannot say that. Additional transactions cannot be understated. Next, accounts of liquidators. Now, this is an important topic, guys. We audit accounts of liquidators. Liquidators are people who assist companies in liquidating their assets. The companies which are under liquidation, the liquidators, prepare accounts for those companies and help sell off the assets of the company and repay the creditors or the liabilities. Audit of liquidator is conducted on similar lines as other companies. Auditor should ensure that liquidators accounts is in agreement with the books and records. Auditor should ensure that liquidators account give a true and fair correct view of the realizations and disbursements of the liquidator. When a chartered accountant acts as liquidator, statement of accounts under section 348 shall be audited by the qualified chartered accountant other than liquidator chartered accountant. So liquidator has got certain restrictions. Liquidator accounts should be audited in a much more in-depth manner. Audit of consolidated financial statement. Now this is very, very important. There's company A, there's company B. Company A holds 60% shares of company B. Company A becomes holding company of company B. Company B becomes the subsidiary company of company A. In that case, the financial statements of company A must be clubbed or consolidated with company A. The financial statements of company B must be clubbed and consolidated with the financial statements of company A. And company A's financial statements are then known as consolidated financial statements. So what are the requirements of audit of consolidated financial statement? That is what we are going to study now. To ensure that all the subsidiaries, joint ventures, and associates have been included in consolidated financial statements, we need to ensure that all the subsidiaries of A, okay, there are more subsidiaries of A, all of them should have been consolidated. To ensure that accounts of such entities whose composition of board of directors is controlled by the company is also included in the consolidated financial statement. So sometimes shareholding is not there, but the main company has the power to constitute the board of directors of the other company. That also becomes a holding subsidiary relationship. So holding subsidiary relationship is not only for the shareholding, it is also for other controls which the company holds on other company. Where a subsidiary, associate, joint controlled entity is excluded from CFS, where the subsidiary, associate, jointly controlled entity is excluded from CFS, auditor should examine the reasons for exclusion. So if the company is saying, no, our subsidiary company C should not be included in CFSS, what is the reason? Why are you not including? You have to make sure. Then adjustment of goodwill capital reserve should be made to ensure intra-group transactions should be made, intra-group adjustment should be made. Then to ensure equity attributable to minority interest is determined properly. So the people who are holding minority share, like 40% is held by some third party people in company B, how would that be disclosed in the financial statement? That is also to be taken into consideration. Then what do you mean by audit certificate? Guys, there's a difference between audit report and audit certificate. Audit report tells a fair view of the entire financial statement. However, audit certificate is given on a particular transaction. That yes, your sales during the year is 20 lakh rupees. That is an audit certificate. However, when you talk about the overall true and fair view of the financial statements, then that is to be reported in audit report. So audit report, opinion on financial statements, it is subjective. It is an opinion to financial statement. It is confirmation accuracy of certain fact. Like sales are 20 lakh rupees during the year. This is audit certificate. It is objective. It does not guarantee correctness of financial statement, but it guarantees the correctness of the information which is given in the certificate. So certificate is 100% sure. Opinion or report, audit report is 60% sure. It covers entire accounts. It doesn't cover entire account. It covers only part of accounts. It does not hold auditor responsible for anything wrong. It holds auditor responsible for anything wrong. Okay, so who's giving the certificate? He will be held responsible if anything goes wrong. It may provide suggestion for improvement. It does not provide suggestion of improvement. It covers all the transaction. It covers only specific transaction. It is issued in a specified format. There's no standard format for certificate. It is addressed to members and it is addressed to whomsoever it may concern. So it is addressed to people at large, to whomsoever it may concern. It is addressed to people at large. So anyone can use this certificate. However, in case of audit report, only certain specific people can use that audit report, like members or the board of directors. Okay, sir, got it. So yes, this was chapter number 6 for all of you guys. Reporting requirements. Again, an important chapter, but a very small chapter, so it will be very easy to cover this particular chapter using the notes which I have provided. Okay, that is how the revision is required to be done by you. All right, so let's move on to the next chapter, and the next chapter is chapter number 7, and the last chapter of our syllabus, guys. Chapter is Miscellaneous Audit. Again, I'm marking this chapter as very important chapter. This is again a very important chapter which is there in your syllabus. It's a very important chapter. Very important. It will hold at least 10 marks and up to 15 marks it can go. At least 10 marks of your paper will be there from this particular chapter. A very important chapter. You should definitely do this chapter very well, guys, and it will have an important impact. Now, one very important thing, let me reiterate, guys. If you need these notes, then the description box contains the link. You can download these notes from the description box. Secondly, these notes are specifically targeted towards CMA students. So standard on auditing are not discussed in detail in this particular notes, because standard on auditing are not there in your syllabus in detail. Only certain names and certain few standard on auditing are there in your syllabus, which I have covered in my book. Okay, they are not covered in these notes, but I've covered in my book. So please note that standard on auditing is not there in your syllabus in detail. Okay. Last chapter, miscellaneous audit, which means that now this particular audit will contain any other kind of aspects of audit which are not discussed by us in our earlier 6 chapters. Any miscellaneous topic which has been left is being discussed in this particular chapter. So it will contain audit provisions of various entities, various types of entities and organization. Audit provisions of all those entities and organization will be contained in this particular miscellaneous audit. First one is branch audit, again an important audit. Okay, now what do you mean by branch? Branch means, so suppose your headquarters are located in Delhi, you have a branch in UP. Your headquarters are located in Delhi and you have a branch in UP. So the auditor which is appointed in Delhi, will that auditor be auditing the branch? That is the question under consideration. The auditor of headquarter might not be willing to travel to UP to conduct the audit. Then what will happen? So branch is an integral part of the company itself. It's not anything which is separate from the company. It is part of company itself. But what if the branch is located at a different location and the auditor is not willing to go over there? Now we'll actually study what are the provisions relating to branch. A branch office is a location other than the main office where business is conducted. Accounts of branch office should be audited by the company's auditor or any other person qualified to be the company's auditor. So there's a option which is given to you that a branch office can be audited either by the company's auditor, which means the headquarter auditor which is there. Either that auditor can audit the branch accounts, or any other person who's qualified to be the company auditor. So, even if the Delhi auditor is not willing to go to the branch, then, around the branch, there's a cost accountant. Around the branch, there's a chart accountant. Then he also can audit the branch. So guys, in that case, there'll be 2 audit reports. One is branch audit report, one is head office audit report. And branch audit report will then be consolidated with the head office audit report. Accounts of the foreign branch shall be audited either by the company's auditor or any other person qualified in accordance with law of that country. So if the branch is located outside India, so Delhi is the headquarters and branch is located in Singapore, then that Singapore branch can be audited by the Singaporean auditors. But it will ultimately be consolidated in the audit report of the main head office. The branch auditor should send his report to the company's auditor, who should incorporate it in the main report. Duties and responsibility of the branch auditor is the same as the main auditor. This is the provisions of branch auditor, and a very, very important concept, guys. Sometimes we wonder that if the main auditor is not willing to conduct audit of a branch, then what should he do? He should appoint an auditor who is holding the same qualification and experience as himself. Okay, he can appoint it over there. What do you mean by joint audit? Joint audit means, guys, certain big organizations appoint 2 auditors as their auditors. Certain big organization appoint 2 auditors. Like, if you see Reliance Industries Limited balance sheet and Reliance Industries Limited audit report, there'll be 2 auditors which are written in that audit report. And in my class, I always show balance sheet of Reliance Industries Limited. You can also download it from Google. It is available on Google. There are 2 auditors. One is one of the big fours, either Deloitte or something else. Deloitte, and there is Shah and Company, JK Shah, something like Shah and Company is the second auditor, right? So joint auditor means in case of big organization, audit cannot be accomplished with single individual. So for overcoming such situation, joint auditor is appointed. What is the advantage? Lowers the workload on single auditor. Timely completion of audit happens. Improved quality of audit happens. Healthy competition is seen. Disadvantages are ego clashes between 2 auditors. 2 auditors will start fighting with each other. Costly, because both of them will ask for remuneration. Lack of coordination between auditors. Then dispute and distribution of work. Who will do what? Part of the work should be done by auditor A, part of the work should be done by auditor B. Who will do what? Shrugging off responsibility. One auditor A will say auditor B should have checked it. Auditor B will say auditor A should have checked it. Shrugging off responsibilities. Responsibilities of joint auditor. Joint auditors are responsible for respective work allocated to them. First of all, the joint auditor are responsible for the work allocated to them. Work will be distributed between both of them. But joint auditors are jointly responsible for the work which is not divided among the joint auditors and is carried on by all of them. If the work is not divided between both of them, and some work remains undivided, then that is liability of both the auditors. Decision taken by all joint auditors. If the decision taken by all joint auditors for certain thing, then both of them will be responsible, held responsible. In respect of matters which are brought to notice of joint auditors by any one of them, on which there is an agreement amongst the joint auditors. So matters which are highlighted by any of the joint auditor, that matter becomes responsibility of both the joint auditors. So net, even when the work is distributed, then also both the joint auditors should work in close proximity, should work in close coordination to ensure that audit is completed fine. Disclosure requirements of the financial statements. Ensure that audit report complies with the requirements of the relevant statute. Joint auditors should be able to arrive at an agreed report. Where joint auditors are in disagreement, each one should express his opinion through separate reports. So there might be two reports, one by joint auditor 1, other by joint auditor 2. There might be separate audit reports also. This is a possibility. Okay, sir, got it. Now, guys, there are certain transactions where the steps of audit are to be done in a specified way. Now we'll be discussing those. Now there are several things where audit is to be done in a very specific way. Okay, for example, allotment of shares. Audit of shares and securities. If you want to audit the allotment of shares, which means the shares are allotted to the shareholders, either the first time shareholders or any second time shareholders, allotment is done to the shareholders. How will an auditor audit this particular transaction? And guys, mind you that in the examination, this particular portion will come for a very heavy marks. I know it is difficult to remember each and every portion of these parts, but yes, you have to. If you read through these steps thrice or 4 times, then you will automatically be able to appreciate and remember the steps of auditing of each of these specific account heads, like fixed assets, like inventories, okay, educational institutions, hospitals. You just have to read it thrice. You'll be able to remember it, okay. So for an example, so we are not going to discuss all of them. I'll take some certain parts of these particular special audits, okay. Allotment of shares. Verify the contract to ascertain number of shares to be issued. First of all, you need to understand what are the number of shares which are to be issued. You need to know about that. Then examination of prospectus to understand terms of allotment. Prospectus is the advertisement which is given for conducting audit of shares of allotment, okay. Then check if minimum shares have been subscribed to or not. So there's a minimum limit which is given in the regulations, which says that at least this much of shares should be subscribed. If you are not able to subscribe this much percentage of shares, then your entire share allotment goes for a toss. That needs to be checked. Ensure timely receipt of application money. Application money should be received by the company on a timely manner. Refund of application money, if required, should be done properly. Return of allotment should be made to the registrar on time. Alteration in share capital. If share capital is required to be altered, then it is to be authorized by the articles of association. Article of association should contain that yes, alteration has happened in the share capital. So alteration is only authorized by the AOA. Check board or general meeting resolution that alteration is approved. MOA alteration should be carried out. The denomination should be more than 1 in the share capital. Verify that proper accounting entries have been passed. Accounting entries should be passed. Register of members should be checked to see that necessary alteration have been effected. Issue of bonus shares. Now, in case of bonus shares, when issue of bonus share happens, it is to be authorized by articles of association. Bonus shares should be authorized by articles of association. Check board and general meeting that resolution is passed where bonus is approved. Check that company has issued bonus shares to its members only. Bonus shares are specifically meant for shareholders only, not for third party. So this should be ensured. Confirm that issue of bonus shall not be made by capitalizing reserve created by revaluation of assets. So there's a restriction of issuing bonus shares when you capitalize reserves in revaluation of assets. That should not be done. Check whether company has made any default in payment of interest or principal. Okay, so these are the steps. Okay, buyback of shares. Now let me directly go on to, these are the various categories of shares. Okay, whatever transactions have happened in shares. Okay, now let me touch base certain important categories, guys. Yes, fixed assets, very, very important. How do you audit fixed assets? Similar one is inventories. Okay, so let me go through fixed assets. Auditor should review the internal controls or acquisition like authorization, capital budgeting, etc. Who has authorized acquisition of asset? That is to be ensured. Physical verification of fixed assets should happen. Auditor should actually go to the plant and see whether the fixed assets are actually there or not, or they are existing on papers only. Check whether proper records are maintained. Depreciation should be checked. Supporting documentation of acquisition or disposal should be checked. Check whether scrapping retirement of fixed asset is properly authorized. So the old assets which are scrapped off, the scrapping should be authorized. The MD should authorize that yes, these fixed assets should be scrapped off, should be sold to the kabadi wala. Check whether sales proceeds of fixed asset are accounted. So the sales proceeds should be accounted properly. Title or ownership of fixed assets should be ensured that this fixed assets are owned by the company. That should be ensured by the invoices or the sales agreement. Then audit of educational institution. Educational institution means schools, colleges. So the first and most important thing which is to be studied in education qualification, education institution audit is there should be a trust deed or regulations according to which the educational institution is made. So there has to be trust deeds and regulations. Read through minutes of meeting. Minutes of meetings are required to be read through by the managing committee, governing authority. Check names in the student fee register. So whatever fee is being recovered from the students, check the names of the students. Whether fee which is received is duly accounted for in the books of accounts. So you have to check whether fees is accounted for in the books of accounts. Verify that free studentship. Free studentship means scholarship or concessions have been granted by the person authorized to do so. So scholarship should be granted by the person who's authorized to give a scholarship. Okay. Confirm that fines for late payment have been collected or remitted under proper authority. Fines have been collected. Okay. Vouch donations. Donations should be seen and donations should be mentioned in the books of accounts also. Donations have been accounted for. This also should be confirmed. Then very, very important, guys, audit of hospitals. Again, guys, in case of audit of hospitals, a charter or trust deed should be seen. The bylaws according to which the hospital is set up, those bylaws should be seen. Charter or trust deed should be seen. Then voucher entries, patient bill register should be seen. What is the patient's bill register? That should be seen. Vouch collection from patients, copy of bills which are there for the patient, they should be seen. Legacies and donations, the donations which are received or legacies which are received for specific purpose, the income therefrom is not utilized for any other purpose. So if the donation is received for a specific purpose, its utilization should be done for that purpose itself. Where receipts or subscription shows a significant deviation from budgeted figures, it should be thoroughly inquired into and the matter to be brought to notice of trustees. So wherever the subscription which are received are if there's any subsequent deviations in the receipts which are made from the budgeted figures, the deviation should be analyzed by the managing committee. Government grant should be accounted for properly. Capital expenditure should be incurred under proper authorization. Whatever capital expenditure is incurred, they should be authorized by the top person of that particular hospital. Verify system of internal check, examine appointment of staff, payment of salaries, etc., physical verification of investment, fixed assets, etc. Now we come on to cooperative societies. Now what are cooperative societies, guys? Cooperative society means where few people associate together for common benefit, for their individual benefits, for their common benefits, they join hands and they associate with each other. That is known as a cooperative society. The feature of cooperative society is that the main purpose is not earning profits. The main purpose is to join hands together for a common economic objective, for a common purpose. The joining of hand happens. So cooperative society is an association of persons who have voluntarily joined together to achieve a common economic objective. Generally, only chartered accountant appointed by the registrar of cooperative societies can be appointed as the auditor of the cooperative society. Chartered accountants are the appointed persons. Ensure that no member of the society other than registered society can hold more than 20% of total shares of the society or number of shares of which value exceeds 1000 rupees. So only the members of the society should be the registered members of the cooperative society. No other member of the society other than registered society can hold more than 20% of total shares. So the members of the society can hold at most 20% of share in the cooperative society, unless until the cooperative society is a registered cooperative society. So if it's a registered cooperative society, then it can hold more than 20%, but otherwise not more than 20% shall be held by one member. Ensure society accepts loans from the members as per the bylaws. Ensure accounting entries are properly done and the cooperative society has invested its fund in a proper manner. Bank audit. What are the salient features of bank audit? Internal controls are there with respect to cash, deposits, advances are in place. Inspect the cash in bank physically and ensure that it tallies with the cash book balance. Reconciliation of balance with RBI as stated in the books of accounts vis-a-vis as appearing in the certificate received from the RBI. So whatever balances are kept with RBI, like SLR, statutory limit, the SLR is kept with RBI, or any other the limits, according to the limits, the amount is kept with RBI, that is to be reconciled with the statement received by RBI. Fixed assets accounting should be done. Title ownership of fixed assets should be there properly. Depreciation should be calculated properly. Information relating to number of unaudited branches should be given. So whatever branch is not audited by the auditor, that detail should be given in the audit report or the annexures. Audit report to be submitted in LAFAR, long form audit report. This is the name of the audit report which is to be submitted in case of banks, LAFAR, as specified by RBI. Then audit of trusts. What are trusts? Guys, trusts are special bodies which are created for the purpose of benefit of beneficiaries. I'll give you a simple example, okay? This is mother and father. They have a minor child. Mother and father both know that they are suffering from a deadly disease and their lifespan is not more than 2-3 years. So what they do is they want to transfer their entire property to the child, but the child is minor, so they cannot do so. So what they do is they transfer the property to the trust. The trust, after the child becomes major, trust will transfer the property to the child. This is the procedure of trust. So now we are going to study what are the essential elements of audit of trust. To ensure that trust has been established as per the provisions of the Act. So the trust should be established as per the proper legal provisions. That is the first requirement. Should physically verify the cash in hand. Expenditure should be verified. The expenditure should be done as per the budgeted expenditure. This should be verified. So these are the 3 points which are to be seen when you are auditing the audit of a trust. Audit of municipalities, panchayats, local bodies. So if any panchayat is there, municipality is there, local bodies are there, how audit is required to be done. Guys, the expenditure is the key of these societies. The expenditure should be audited as per the norms which are given, financial rules. Expenditure shall be done as per the financial rules. So first thing which needs to be ensured is that expenditures are to be done as per the financial rules. To ensure that sanction and authorization is granted by the competent authority for every expenditure. So, sanction and authorization is very much required in case of panchayats, any local body. Sanction should be done by the relevant approval authority. To ensure where huge financial expenditure is made, is run economically and is expected to contribute to growth. So wherever the expenditure is made, that expenditure should reap benefit to the local body or the people who are being benefited from the local body. The benefit should be given, benefit should be reaped by such people. That is the duty of the auditor to ensure this particular part. Okay, sir, got it. So guys, yes, this was chapter number 7 for all of you. Again, chapter number 7 will contain the miscellaneous audit portion. That is the major portion. How to audit share capital, how to audit loans and advances, how to audit fixed assets, how to audit local bodies, hospitals, educational institution. Definitely examiner will give at least one of these in the examination for sure. So you need to complete the chapter number 7 with very, very accurate revision, guys. Okay. All right. So finally, after 4 hours of hard work, after 4 hours of unlimited studies and a marathon video, we are done with our syllabus of audit. And yes, for revising this particular syllabus of audit, you will not take more than 1 hour before the examination. So 1 hour, 2 hours max you will take before the examination, because you have attended the entire marathon well. So yes, now we come to the end of this particular marathon. Now I need some review feedback from you in the chat box. Guys, please tell me, how did you find the marathon? No, there are no amendments in audit. No amendments in audit. How did you find the marathon? Did you find it useful? Did you find it useless, or what? What did you find about the marathon? And yes, guys, please definitely hit the like button. We target hitting the like button as much as we can. And yes, please tell me your feedback. Are we still energized? If I want to take some few more revisions, are we still energized? Was this marathon worth it for all of you? Priyanshi, it was awesome. Ishita, best. Good. Kirti, maza aa gaya. Brilliant, guys. Thank you so much for these amazing reviews. Any other? Very satisfying. Very useful, sir. Thank you for the marathon. Thank you so much, Sanjay Singh. Alfie saying it is very useful. Thank you so much. Akash Kalra, worth it. Okay, all right. Yes. Best and effective, sir. Very good. Very useful marathon for exam. Deepti saying, yes, we revised so smoothly. We can revise again. It was very useful. Okay, good, good, good. आयुष is saying good, very useful, thank you sir. अगर खुद पढ़ते तो शायद बीच में ही सो जाते. Ishita is saying अगर खुद में पढ़ते तो सो जाते. Awesome, it's very, very good, useful a lot. Love you sir. Okay, love you too guys, love you too guys. Now please tell me whether you will be able to attain 80 marks out of 100 in your examination, paper number 12. Whether are you confident that you will be attaining 80 marks out of 100 marks? Will you get 80 marks out of 100 marks? Please tell me. Please commit it to me. Whether you will get 80 marks out of 100. Radha Krishna says, super. It gives confidence to attend the examination. Can you take for IDT? No, I don't teach IDT. Please guys tell me, will you attain 80 marks in your examination? Yes or no? Yes or no? Will you attain 80 marks in your examination? In your 12A plus B paper? 80 marks. And costuming also, sir, for CMA final. Okay. I will make sure. Sure. Yes, 60 to 80 marks. People are saying 60 to 80 marks for sure. Yes, sir, I will. Yes, sure. Very good. Very good. Brilliant. Brilliant, guys. You're all welcome. You're all welcome. Most welcome. Yes, my efforts will be consistent towards your success, towards your attainment of good marks in your examination, and I'll be definitely working towards all the subjects which I teach. I'll definitely sincerely work towards all those subjects in making sure that you attain the desired results. So yes, that's all from my side today, guys. See you, all of you, in finals. Next stage is final. I wish and pray that all of you, I see all of you in CMA finals very, very soon. And in CMA finals, we are going to rock the CMA final as well as we are going to rock CMA Intermediate. So all the best for your examination. Precisely 4 days to go for your examination. 27th is your first examination. All the best guys for your examination. And yes, do hit the like button before you leave this video and share this video. Come back to this video whenever you want. Do hit a like button on this particular video. And yes, we'll be meeting in our subsequent sessions. Till that time, all the very best and happy studying. Bye-bye. See you in the next session.